Good morning, everybody. Now, today we will be starting with what? Quick revision of the indirect tax laws. Now, basically, in this particular quick revision batch, we will be trying to complete our entire syllabus of goods and services tax and customs and foreign trade policy, say within 25 to 30 hours. So, basically, this batch is meant for those students who have already completed their syllabus, as you already completed your syllabus. And if you are facing any difficulty at the eve of examination, how you will be revising the entire syllabus within that short time span of 25 to 30 hours, for that purpose, we will be going with this particular quick revision batch. Okay. So here we will be completing the entire topics, but the thing is, emphasis will be made on the most important topics. We will be revising the entire topics, and key focus will be on the most important topics because the same can be asked in the examination. So we must be focused here that these will be the important ones. These are the ones which we can ignore. Category wise, if you bifurcate the same, so category A items will be emphasizing on more on category A items in comparison to say category B and category C items. Okay. So here the thing is practical questions that will be covered by you. We have given the compiler for the same, and in this particular lecture we will be entire goods and services tax and customs and foreign trade policy. We will be revising the same through these tables, through diagrams, through charts. So this is basically chart based revision, and PowerPoint presentation. We have made charts in the PowerPoint presentation, and we will be providing you the PDF of the charts. In case if you want to get them printed, it is up to your option. Otherwise, you can see the same in your tab or in your mobile phone or your laptop, as the case may be. Now, as you are aware of the fact that in whether it's a CA examination or CS examination or CMA examination, the fundamental law will remain same. It won't change. Basically, the subject weightage for CA students is what? For this goods and services tax, as you are aware, it is of 75 marks, and customs and foreign trade policy. Customs, foreign trade policy and customs, basically that is what? 25 marks. This is 25 marks. And here (30 marks) case scenario based MCQs and independent MCQs are there, and 70 marks is your subjective paper. Everybody must be knowing this, just for giving you a brief idea for the same. And here we have to attempt, say 14 marks question is there. First question 14 marks, that is compulsory question, that is from the goods and services tax, and remaining 14 into 4, 56 marks is there. Out of 5, you have to attempt 4 questions. One is compulsory, that is to be done by you, and out of 5, 4 questions are to be attempted. This is 9 marks for GST. Normally it is 9 marks for GST. Each 14 marks divided as, and 5 marks for what? Customs and foreign trade policy. And mostly the questions which are asked in CA examinations, they are also asked in the CMA examination or CS examination, because fundamentally the paper, syllabus is same. So because it is a same law, we do not find any option, basically say any, I would say we will not find anything that we will be giving what separate batch for CA students and separate batch for CS students or separate batch for CMA students. No utility was there. Therefore, all the students have been, say, merged in this batch for quick revision. So you can supplement this basically our this 25 say 25 to 30 hours duration with the quick this our compiler also, in case if you want to do the compiler practical questions you can do from the same. So first of all, what basically GST is? GST is an indirect tax. GST, it is an indirect tax. What is the difference between a direct tax and indirect tax? As you are aware of the fact that indirect taxes, it is tax on goods and services. It is basically tax on goods and or services, where the incidence of the tax passes on to the person who ultimately consumes those goods or services. So here, the incidence of the tax, they passes on to the person who ultimately consumes the goods or services. So it's an indirect tax. Say, I am a supplier, I will be passing on the burden to my recipient, GST burden to my recipient. I am importer of goods, I will be paying custom duty, and when I will be subsequently selling the goods, I will pass on the burden to my customer. So basically, that is what? It's an indirect tax. And indirect taxes are, the basic nature is what? Indirect taxes are regressive in nature. Indirect taxes are what? Regressive in nature. Regressive in nature in the sense that whether I am a rich person or I am a poor person, every person has to bear the incidence of tax equally. Even if I am earning more, but I am, say, consuming, say, any food items, I consume any ice cream, whether I am earning more, whether I am earning less, I will have to pay the GST on the ice cream. So fundamentally, equal amount of GST, irrespective of my earnings. So it is regressive in nature. So and what is direct tax? Direct tax basically the tax where the person has to bear the incidence of tax. The person who pays the tax has to bear what? The incidence of the tax. The person paying the tax to the government directly bears the incidence of the tax. He cannot pass on the burden to any other person, like income tax is a direct tax. Earlier wealth tax was there, earlier gift tax was there. So they are what? Direct taxes. And direct taxes are progressive in nature. Normally, as you are aware, that if I am earning 2,50,000 rupees, that is the basic exemption limit is there. Or in case of a senior citizen, it is say 3 lakh rupees, or senior citizen, it is 5, very senior citizen, it is what? 5 lakh rupees. So at this level of tax, this level of income, I won't be required to pay any tax. Then my income increases, I have to pay, say, 5% tax. In case if my income is from, it exceeds the basic exemption limit of 2,50,000, reaches 5 lakh, I have to pay 5%. From 5 lakh to, say, 10 lakhs, I have further to pay, say, 20%, and below, say, beyond 10 lakh rupees, 30%. So indirect taxes are, say, regressive in nature. Direct taxes are progressive in nature. Major indirect and direct taxes, as you are aware, now we are having one goods and services tax. We are having custom duty. We are also having, still we are having central excise duty on petroleum products. Central excise duty is levied. VAT is also levied. And on alcoholic liquor for human consumption, state excise duty is levied. On tobacco and tobacco manufactured substitutes, VAT, as well as what? State excise duty, as well as GST is also levied. Now here, in case of direct tax, as you are seeing, the person is himself bearing the burden of the tax. Burden of tax is borne by the person himself. Whereas in case of indirect tax, burden of tax shifts to the ultimate consumer. Burden of tax, it shifts to the ultimate consumer. Now let us start with goods and services tax. First of all, before going with the genesis, we see what are the deficiencies in the earlier system of taxation that led to the implementation of GST. So as you are aware, earlier we were having, say, excise duty. Earlier we were having excise duty. Excise duty was what? excise duty is a duty on production or manufacture of excisable goods in India. Excise duty was what? It's a duty on production or manufacture of excisable goods in India. We were also having VAT. Excise duty was a duty on manufacture. VAT was levied on sale of goods within the state. And in case of interstate sales, central sales tax was levied. And on services, we were having service tax. Service tax was levied on services. Now, basically, what was the, in the earlier system of taxation, the value base, say value base is 1 lakh rupees. Say value base is, say, 1 lakh rupees, on which excise duty was levied, say 12,500 rupees. Then on 1,12,500 rupees, including excise duty, VAT was levied on subsequent sale of the goods. So VAT was levied, say, at rate of, say, 14% or 10%. So on 1,10,000 rupees. So what was there was a cascading effect of tax. There was tax on tax burden. On excise duty element also, VAT was levied. Because this VAT was a subject matter of state government. Excise duty was a subject matter of, central excise duty was a subject matter of central government. Therefore, central government will not provide any credit of the excise duty so paid for payment of the output tax liability, that is our VAT liability, when VAT liability was there. So, first of all, there was what? Cascading effect of tax. That is levy on of, say, non-vettable CST. Central sales tax was also not vettable. And inclusion of the excise duty in the value addition for imposing what? VAT. So, say no SAN-VAT was allowed after manufacturing stage. Manufacturing stage, excise duty was levied at the manufacturing stage. We can take the credit of excise duty not for the payment of, say, VAT, but we can pay take the credit of the excise duty for payment of, say, service tax. Similarly, service tax credit was allowed only for payment of, say, excise duty. So no SAN-VAT was there after manufacturing stage. Then service tax ITC was not available for payment of VAT. VAT ITC was not available for payment of the service tax. So because of the multiplicity of taxes, these were the various deficiencies in the earlier system of taxation. So because of the multiplicity of the same and double taxation on a same transaction, central government levied, say restaurant services were there. Or say works contract service was there. Now, central government used to levy what? Central government used to levy service tax. And state government used to levy VAT when, in case of restaurant services where goods and services both was involved with. These were composite supplies. So that led to what? Double taxation on the same value base, or the value base may not be different, where central government used to levy service tax and state government used to levy what? The VAT. So that led to what? Double taxation of transactions as both goods and services. So these were what? The deficiencies in the earlier system of taxation, which has led to the implementation of GST to cure for all the ill effects existing in the earlier system of taxation, the earlier indirect tax regime. Now here, basically, this goods and services tax is a value added tax, and the same is levied on supply. So here, let us see what goods and services tax is. GST, it is levied on supply of goods or services or both in India. GST is levied basically on what? supply of goods or services or both in India. Now let us see the, the genesis of GST. What is the genesis of GST? So say how the GST, what is the roadmap, how the GST got into force. So in 2000, what happened was, in year 2000, the then Prime Minister, Mr. Atal Bihari Vajpayee, they introduced the concept of goods and services tax, and they set up a committee to design what? GST model for the country. They have, say, introduced the idea that there must be one nation, one tax, that is goods and services tax. That idea was devised in 2000, and they have set up a committee for the same, that whether how the implementation will take place, how the technology will work likewise. Then in 2006, the announcement was made by the Union Finance Minister, Mr. P. Chidambaram was a Union Finance Minister during the budget speech of 2006-07, and he mooted the concept of GST, stating that GST would be introduced with effect from 1st of April 2010. Now India is a democracy. We are having a federal structure. We are having, say, central government. We are having for various states, state governments, and there's a clear division of powers between the center and the state. Now we want to introduce what? One nation, one tax. So there was, opposition's role is to oppose, just oppose. At that time, the today's Prime Minister was there at that time, State Minister of, say, Chief Minister of Gujarat, and they were not liking the idea of this goods and services tax. But when they subsequently came to power in 2014, they liked the idea of now GST. So the Constitution 122nd Amendment Bill was introduced in Lok Sabha. In 2014, the Constitution 122nd Amendment Bill was introduced in the Lok Sabha. And then why amendment was needed? Because we needed a delineation of power here on the same transaction. Same transaction. Both central government and state government would levy tax on the same transaction. For that we needed what? The Constitution amendment, and for that purpose Constitution 122nd Amendment Bill was introduced in the Lok Sabha, and the same was enacted. Constitution 101st Amendment Act, it was enacted in year August 2016. Then the GST Council was created. By virtue of this Amendment Act, they empowered the government to constitute what? A GST Council. And GST Council was constituted, and it will give recommendations to the government how to implement the GST, and the GST Council met in September 2016. Then what happened was, the GST Council then recommended that we must have one central goods and services tax. We will have for states, we will be having state goods and services tax. Various states will be passing their state goods and services tax act. Then central government is empowered to say make an enactment for principles will be framed for determining when the supply will be regarded as an interstate supply, or when the supply will be regarded as an intrastate supply, when it will be regarded as import, when it will be regarded as export. So principles will be formed. For that purpose, the central government was empowered to make IGST Act. Besides this, for various union territories, one single enactment was there, that is UTGST, and for compensating the states of the revenue losses due to implementation of GST, separate compensation bill was made by the council. Council recommended the same. Then in April 2017, Lok Sabha as well as Rajya Sabha, they passed the Central Goods and Services Tax, Act. That bill was passed to become the Act. IGST, UTGST and Compensation Acts were passed. These bills were passed to become the act on signing by the President. And then in May 17, GST Council recommended all the rules. Then came the date, that is the 1st of July 2017. 1st of July 2017, then the Prime Minister Narendra Modi, then they started the implementation of what? Goods and Services Tax. So on 1st of July 2017, we were given, as we were told, that economic freedom, India has now achieved economic freedom with effect from 1st of July 2017. One nation, one tax was introduced. That is one nation, one tax. The same was introduced with effect from 1st of July 2017. That is Goods and Services Tax. So here all the states except state of Jammu and Kashmir, they have passed their state legislations. So GST was launched with effect from 1st of July 2017. Then on 8th of July 2017, SGST Act was passed by the state of Jammu and Kashmir. Then this naturally afterwards the journey that has continued for the implementation of what? After the implementation of Goods and Services Tax, because if a child is born, we see various teething problems are there. Similarly, when GST was introduced, there were problems, and in necessary looking to these problems, necessary amendments were made, and till then, we are moving, and round about every month, the collection of Goods and Services Tax is increasing. Target, we say around about 1 lakh crore. Now we are reaching above 1 lakh crore also per month, GST collection. So this was about the genesis. Now what basically GST is? GST is a value added tax. Because why it is a value added tax? It's tax on value addition. Whatever tax has been paid at earlier stage, whatever tax has been paid at earlier stage is allowed as credit. So here there is a continuous chain of tax credit, and the burden is to be borne by whom? The ultimate consumer. Ultimate consumer is to bear the GST burden. There is no cascading effect as such. There is no tax on tax burden. Say, if 100 rupees is the value of supply which the manufacturer is supplying, and he has levied GST at rate of 18%, then the manufacturer sells the goods to the wholesale dealer. Wholesale dealer will purchase the same for 118, will get an input tax rate of 18 rupees, he will get a ITC of 18 rupees. So his effective cost is 100 rupees. Now in case if we make a value addition of 50, then on 150, GST will be levied at rate of 18%. Say that is 27 rupees GST is levied, 27 rupees GST is levied. Okay. So here he will be charging from his customer 150 plus 27, 177 rupees, that is the retailer, and he will be depositing to the treasury of the government how much amount of GST? 27 is the output tax liability, 18 rupees the input tax rate involved, so he will be depositing 9 rupees. Then this retailer will get a credit of 27 rupees, he will get a credit of 127 rupees. On say 150, he makes a value addition of 30 rupees. He makes a value addition of 30 rupees and he sells the product to the consumer for 180, on which 18% GST will be levied. 180 into 18%, he will collect this much amount. 180 into 18%, that is 32 rupees, 40 paisa will be collected from the customer, and he will deposit the differential amount to the treasury of the government. He is getting a credit of 27 rupees. So he will be depositing 5.40 rupees, 5.40 rupees to the treasury of the government. So here ultimately how much amount of tax has been borne by the consumer? That is 32 rupees and 40 paisa. And government is getting at various stages 18 rupees from the manufacturing stage, then 9, subsequently here 9, then here 5.40. Likewise, the government is collecting. Government has collected how much? 32.40. Government has collected 32.40 at various stage, and this is the tax which is say ultimately borne by the consumer, that is 32.40. So here we can say what is basically concept of GST. It is a tax on value addition. It is basically a tax on say value addition, and there is a continuous flow of tax credits, as we have seen. Whenever manufacturer is supplying the goods to the wholesaler, he will get whatever tax is paid by the wholesaler, he will get the credit of the same. Whenever wholesaler supplies the goods to the retailer, credit will be allowed. So there is a continuous chain of tax credits, and burden is to be ultimately borne by the consumer. As we have seen, 32.40 rupees has been given to the treasury of the government. This is the ultimate amount with the burden is to be borne by the consumer, and there is no cascading effect. No cascading effect. There is no tax on tax burden in case of say GST. So what are the need we have seen? What was the genesis we have seen? What is the concept of GST we have seen? Now let us see what is the framework of goods and services tax in India. So as you are aware of the fact that we have a clear division of powers between what? The center and state. With the subject matters which are listed in the union list, central government has the power to make the laws. For subject matters which have been listed in state list, state government has power. So there is a what? Complete delineation of powers between the center and the state. The complete delineation of powers between the center and state. And here, on a single transaction, GST is to be levied, that is by the center as well as the state. For that purpose, we need amendment in the constitution. So both center and state is empowered to levy GST on a same transaction, on the same value base. For that we needed what? An amendment in the constitution. For that purpose, because there is a what? Federal structure. Because of federal structure, we have introduced what? Dual GST model. This is because of the federal structure. That is, we are having the center. It will be levying central goods and services tax, and the states, various states, they will be levying what? State goods and services tax. So here we have framed what? The Central Goods and Services Tax Act, State Goods and Services Tax Act for various states. They have what? Implemented their State Goods and Services Tax Act, their State Goods and Services Tax. For the union territories with the independent legislature, that is Delhi, Puducherry, Jammu and Kashmir also. We are having say Delhi, Puducherry, Jammu and Kashmir. We are having State Goods and Services Tax Act in the Delhi, state of Delhi, in the say union territory of Delhi, as well as Puducherry, as well as say Jammu and Kashmir. Now, for remaining union territories, we have what? The UTGST Act. We are having say UTGST Act. One UTGST Act is there. And when the supply transaction is a inter-state supply transaction, IGST is levied. Now, how basically, when we see this, so let us see. If a supplier of goods says in UK, Uttarakhand, not UK, you may say it is in Rajasthan. Supplier of goods is in Rajasthan. Place of supply, where the goods are supplied, is also in Rajasthan. It is in Rajasthan. Where location of supplier and place of supply, they are within the same state. It is regarded as intra-state supply. It is regarded as intra-state supply, on which CGST plus SGST is levied, or which CGST plus SGST is levied. So value of supply is 1 lakh rupees. Value of supply is 1 lakh rupees. CGST is levied at rate of 9%. SGST is levied at rate of say 9%. It is an intrastate supply. If say supplier of goods is in Rajasthan, if supplier of goods is in Rajasthan and place of supply, goods are delivered in UP, it will be regarded as what? It will be regarded as interstate supply. It will be regarded as interstate supply, and the same will be subject to IGST, and the same will be subject to say IGST. It will be subject to say IGST. Okay. So let us see, if say foreign territory, from foreign territory say UK, goods are supplied in state 1, it is regarded as import. The same is regarded as import. Import of goods or service. Is this import is deemed interstate supply? Deemed interstate supply. And on interstate supply transaction, IGST is levied. Likewise, there IGST will be levied at rate of 18%. So it is interstate supply, and when it is a deemed interstate supply, here IGST is levied. Say if the supply takes place within the same state, if the supply takes place within the same state, what will be levied? CGST and SGST is levied. Supply takes place from one state to another state. There is location of supplier and place of supply are in two different states. Then it is regarded as interstate supply. IGST is say levied. Then if the supply takes place within the state, CGST and SGST is levied. Similarly, if supply takes place within the union territories without their legislature, without their independent legislature, then what is levied is SGST, CGST and UTGST is levied. So CGST and UTGST is levied. Say if supply takes place within Ladakh, then CGST and UTGST is levied. And if supply is taking place from foreign territories to union territory, IGST is what? Levied. Now this is basically legislative framework. We are having the CGST Act 2017 for 28 states plus 3 union territories with the independent legislature. We are having different SGST Act. We are having UTGST Act, one UTGST Act. We are having IGST Act, and we are having say GST compensation cess. GST compensation cess. These are what the enactments which have been made under the GST laws. And what you have to do is, we are required to do the Central Goods and Services Tax Act as well as Integrated Goods and Services Tax Act. Because State Goods and Services Tax Act framework is same as of what? the Central Goods and Services Tax Act. Now, relating to the classification of goods and services, we have adopted the customs tariff classification, which is based on what? Harmonized commodity description, and coding system for classification of goods. Why need classification? Because we are not having a single rate, because of multiplicity of rates. Then for services, we are having services accounting code. For services, we are having, say, services accounting code. Then for small traders, small manufacturers, small service suppliers, in case if their aggregate turnover, say, does not exceed rupees 150 lakhs, and in case of service suppliers, if that same does not exceed rupees 50 lakhs, then we have, say, a composition scheme, where they are required to pay tax at composite rate, and they will not be entitled to take any input tax credit. Here, they are required to pay tax at a composition rate. They are not entitled to take ITC, and the amount of composition tax burden, it cannot be passed on. Then, relating to the registration, we are having threshold exemption. That is 20 lakhs and rupees 10 lakhs. If your aggregate turnover do not exceed rupees 20 lakhs or 10 lakhs, you are exempt from obtaining registration, you are exempt from the requirement of GST. So basically, the states with a threshold limit of 10 lakhs are what? Manipur, Mizoram, Nagaland and Tripura. Manipur, Mizoram, Nagaland and Tripura. If you are a supplier of goods or you are a supplier of services, your threshold limit will be 10 lakh rupees. If you are supplying the goods in the state of Manipur, Mizoram, Nagaland, Tripura. Then, if you are supplying from Arunachal Pradesh, these are the northeastern states. That is Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana. Other than these, Puducherry and Telangana, they have, whether you are a supplier of goods or whether you are a supplier of services, that is Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand. The threshold limit of say turnover is rupees 20 lakhs, and the threshold limit of turnover is rupees 40 lakhs in case of exclusive supplier of goods, that is in Jammu and Kashmir, Assam, Himachal Pradesh and all other states. So threshold limit will be rupees 40 lakhs. For service suppliers, it will be what? Rupees 20 lakhs, irrespective whether they are operating in Jammu and Kashmir, Assam, Himachal Pradesh or say other states, or they are giving supplying in Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and this Telangana. So fundamentally, Manipur, Mizoram, Nagaland and Tripura, the threshold limit is 10 lakh rupees, whether is a supplier of goods, whether is a supplier of services. For Jammu and Kashmir, Assam, Himachal Pradesh and other states other than special category states, these are basically all special category states, except two, all these are what? Regarded as special category states. And for them, if you are a supplier of goods, intrastate supply of goods is taking place in Jammu and Kashmir, in Assam and in Himachal Pradesh, the threshold limit of registration will be rupees 40 lakhs. If you are a service supplier, then it will be 20 lakhs. Then exemptions have been provided in respect of certain goods and services. Certain goods and services have been made exempt from tax. Now we are having in GST, we are having seamless flow of credit. Earlier, CST was non-vettable, but now seamless flow of credit is there. Let us see. Say for example, if Mr. X of Delhi supplies goods to Mr. Y of Delhi. So here why will be entitled to take the input tax credit? So the value of supply is 1 lakh rupees. This is value of supply. And CGST is charged at rate of 9%. And SGST is charged at rate of 9%. Now why supplies the goods to Mr. X? So Mr. X, why supply the goods to Mr. Z? Mr. Z is in, say, Haryana. Now value of supply is 1,50,000 rupees. Value is what? 1,50,000 rupees. Now which tax will be levied since the interstate supply? It is a what? From Delhi it is supplied to Haryana, it's known as interstate supply. Interstate supply. IGST is levied at rate of 18%. IGST is levied at rate of 18%, say 27,000 rupees. Now, input tax credit is allowed. Whatever CGST and SGST is being paid, ITC is allowed. So, this is IGST. Will be allowed credit of what? CGST and SGST. This is a seamless flow of credit. He is getting a credit of 18,000 rupees. 9,000 is CGST element, 9,000 is SGST element, and deposit 9,000 rupees to the treasury of the government. Now, this is seamless flow. Z supplies the same to Mr. P of Haryana for rupees 2 lakhs. What he will be charging? It is the interstate supply. It is the intrastate supply. What it is the intrastate supply? What he will be charging? CGST at rate of 9%, SGST at rate of 9%. That is 18,000 and 18,000. So here 36,000 is charged. CGST is 18,000 rupees. SGST is 18,000 rupees. That is charged less ITC. Input tax credit is admissible. How much ITC is admissible? 27,000 ITC is admissible. Which will ITC of IGST is admissible. So if there is a seamless flow of credit, they will take credit of 18,000 here and 9,000 here. Or it can be other way around also. So even IGST credit is allowed for payment of CGST and SGST. Similarly, SGST credit, CGST credit allowed and SGST credit is allowed for payment of IGST. Okay. So seamless flow of credit is there. Then we are having this has been done through common portal. Section 146 provides for constitution of common portal. That is what common portal is there, www.gst.gov.in. This is a common portal. And there are goods and services practitioners are there, Suvidha providers are there, and application service providers are there. Compensations, as you are aware, on certain luxury items and certain demerit goods, compensation cess is levied. Basically, it is to compensate the government for the revenue losses. And GST is a tax on all goods and services, except what? Supply of all goods and services, except alcoholic liquor for human consumption, and petroleum products have been kept out of purview of GST till the time when the government so notifies the same under the ambit of GST in, say, on recommendation of the council. Now, what are the central and state levies which have been subsumed in GST? Central and state levies which have been subsumed in GST. Central excise duty, except for few items, there is petroleum products. Central excise duty has been subsumed in GST. Duties of excise, medicinal and toilet preparations act, additional duty of excise, goods of special importance act, Additional duty of excise, textile and textile articles act, additional duties of customs, special additional duties, service tax, central sales tax, central surcharges, cesses, so far as they relate to say supply of goods or services. So fundamentally these have been say subsumed in say GST. These central levies have been subsumed. Similarly, state VAT, luxury tax, entry tax, entertainment and amusement tax, tax on advertisements, purchase tax, tax on lottery, betting, gambling, state surcharges and cesses. They have been say subsumed in GST. So we have led to say one nation, one tax. More or less, because of the multiplicity of taxes were there, it was creating problems, leading to cascading effect, leading to more and more compliances under the various laws. For various taxes, we have to comply under various laws. So that has been, say, removed now. Now, what are the goods which are outside the purview of GST? Alcoholic liquor for human consumption will remain outside the purview of GST. It is outside the purview of GST. At present, state excise duty and state VAT is levied. State excise duty and state VAT is levied on the alcoholic liquor for human consumption. Then 5 petroleum products, that is crude oil, diesel, petrol, natural gas and aviation turbine fuel. Crude oil, diesel, petrol, natural gas and aviation turbine fuel. They are also outside the purview of GST. They are outside the purview of GST. On the same, central excise duty, state VAT is levied, and interstate supply central sales tax is levied. Entertainment tax, which has been levied by local bodies, also outside the purview of GST. On tobacco, both excise duty and GST is levied. So power within the purview of GST is tobacco. The same is within the purview of GST, but excise duty is also levied on the tobacco. State excise duty is levied on tobacco and manufactured tobacco. Now, what are the advantages of GST? So basically, what is the benefits to economy? It is creating since it's a one nation, one tax, leads to create a unified common national market, and it will boost Make in India mission campaign, as will make more competitive products. Competition will increase, it will lead to manufacturing hub, then it will boost investments, as well it will boost exports, and it will promote more and more employment, and increased economic activity will be there, more employment opportunities will be there. Then relating to tax structure, there is a simplified tax structure is there. We have to furnish, say, because of multiplicity of taxes were there, we have to deal with the multiple bodies, multiple returns were to be filed. Now here simple tax regime is there with fewer exemptions are. Then reduction in multiplicity of taxes, as I have already told you, is now leviable. Tax is leviable, only one tax, goods and services tax, leading to simplification. Then harmonization of laws and procedures and rates across the country, and common system of classification of goods and services will basically help in what? Certainty in the tax administration. Then tax compliance becomes, say, easy. Greater use of IT with reduced human interface between taxpayers and administration. Automation of procedures and processes will be there, leading to, say, for registration, returns, payments, refunds, etc. Everything is electronic now. doing business is basically eased because we are not required to submit multiple reports which were there under the earlier system of taxation, and compliance burden will be substantially reduced in comparison to the earlier tax regime. And basically advantages to trade and industry is there. There is a seamless flow of credit from manufacturer to the say user, retail, or to ultimate consumer. This is leading to what? Elimination of cascading effect of tax. Common procedures will be there for registration, duty payment, return filing procedure, and benefits of exemption and compounding will be given to the large segment of smaller, small traders. Basically, they are getting the benefit of what? The exemptions and compounding scheme, and more efficient neutralization of taxes will make exports more competitive, because tax neutral, we are getting the ITC, so it becomes tax neutral and our exports will increase. So these are basically the benefits or advantages of, say, GST. As you are aware of the fact that we are having, federal structure, where the central as well as the state, they have been empowered to make the laws. For the subject matters which have been listed in the union list, central government is empowered to make the laws. For subject matters which have been listed in the state list, state government has been empowered to make the laws. So there is a clear delineation of powers between the central and the state. Now, on a single transaction, both center and, say, state, they will be now levying goods and services tax on a single transaction. So for that purpose, we needed an amendment in the constitution, basically, which empowered both center and state to levy a tax on a single transaction. For that purpose, Constitution 101st Amendment Act 2016, it has been, say, made, enacted, and that is the basic reason. Now, significant amendments is what? Parliament and state legislatures, they have been given concurrent power to make the laws governing taxes on goods and services. Parliament and state legislatures have been given concurrent power to make the laws governing taxes on goods and services. Then, integrated goods and services tax, IGST. IGST is there, that is on interstate supply. The same will be levied on, say, interstate supply. Here, integrated goods and services tax, the same is levied on interstate transactions of goods and services, supply transactions. The same will be collected by the central government. And it will be apportioned between the central government and the state government. Say 50% share will be of the central government, 50% share will be of the state government. So the same will be apportioned between the central government and state government, that is union and state, in a manner provided by the parliament by law as per the recommendation of the GST Council. Then here, principles for determining the place of supply. And when the supply takes place in course of interstate trade or commerce, the same will be formulated by the parliament. Whether it's a supply is an interstate supply, whether the supply is a interstate supply, that depends upon the location of supplier and place of supply. Now here, the principles for determining the place of supply and when the supply takes place in course of interstate trade or commerce, the same will be formulated by the parliament by law. And GST will be levied on supply of all goods or services. GST is levied on supply of all goods and services except, say, alcoholic liquor for human consumption. GST is levied on supply of all goods and services except alcoholic liquor for human consumption, and GST shall not be levied on the following products, that is petroleum crude, high speed diesel oil, motor spirit commonly known as petrol, natural gas, and aviation turbine fuel. So GST will not be levied on these products till the GST Council recommends to the government the date. Then the government will notify from that date GST will be levied on these 5 petroleum products. Till now, it is subject to central excise duty and state VAT and central sales tax. Besides this, the union government will retain the power. The union government will retain the power to levy GST on the levy excise duty on the aforesaid products, besides on tobacco and tobacco products manufactured in India. And Article 279A, Article 279A of the Constitution, it empowers the President. It empowers the President to constitute this joint forum of the center and states, namely Goods and Services Tax Council. This GST Council, that is the provisions relating to say GST Council, came into force with effect from 12th of September 2016, and here the President constituted the GST Council on say 15th of September 2016, and then the meeting of the GST Council took place. The Union Finance Minister is a chairperson of the GST Council, and the Minister in charge of Finance and Taxation and other ministers which are nominated by the each state, they are the members of the GST Council, and they will meet, and GST Council will give the recommendations on the various important issues like what will be the tax rates, whether the exemptions will be there, which goods must be exempt, which services must be exempt, what must be the threshold limit of the registration, etc., dispute resolutions, etc. Now, Article 246A is a basic article which is giving both center and state power to make laws. So here what they are stating is, notwithstanding anything contained in Article 246 and 254, notwithstanding anything contained in Articles 246 and 254, Parliament and the subject to clause 2, the legislature of state, that is what the Parliament and state legislature, they have been given power to make the laws with respect to goods and services tax to be imposed by union and by such state. So concurrently, simultaneously, both center and state has been given power to make law relating to CGST, plus SGST and UTGST on a single transaction. Besides this, Parliament has exclusive power to make the laws with respect to goods and services tax, where supply of goods or services takes place in course of interstate trade or commerce. So where the supply takes place, when it's an interstate supply, when it is an interstate supply, the power will be with the exclusive power will be with the center. Therefore, they have enacted the IGST Act. And here, the provisions of this article, basically this Article 246A, it will apply in respect of goods and services, shall in respect of GST. It will be with what? Those goods which have been referred in 279A5, that is the petroleum products. The same shall be levied from such date as the GST Council recommends to the government. Subsequently, whenever they will recommend, GST will be levied on those 5 petroleum products. Then Article 269A, it is providing for levy and collection of GST on interstate supply. So Article 269A. So goods and services tax on supplies in course of interstate trade or commerce, goods and services tax on supplies in course of interstate trade or commerce, the same shall be levied by the Government of India. That is, interstate supplies, goods will be levied by Government of India, and the same will be apportioned between the union and the state. That will be apportioned in the union and the state in the manner which is provided by the Parliament by law on the recommendation of GST Council. So 50% will be of the central government share and 50% will be of state government share. Okay. Now imports basically are deemed to be interstate supply, and the same will be subject to IGST. So supply of goods or services or both in course of import into territory of India, supply of goods or services or both in course of say import into territory of India, it shall be deemed to be supply of goods or services or both in course of interstate trade or commerce. And here the amount will be apportioned. The amount will be apportioned to the state, and whatever amount is apportioned to the state on account of the IGST so collected, it will not form the part of the consolidated fund of India. And where the amount collected as tax has been used for payment of tax levied by state, if IGST credit is used for payment of SGST, the central government will transfer the amount to the state account, and it will not form the part of say consolidated fund of India. IGST credit utilized for payment of SGST. Similarly, SGST credit is used for payment of what? IGST. SGST credit is used for payment of IGST. SGST credit is used for payment of IGST. The same will not form the part of the consolidated fund of state. It will be transferred to the respective central government account. And Parliament by law, it will formulate the principles for determining the place of supply. So Parliament has the power to make the laws to determine the place of supply. And when the supply will take place in course of say interstate trade or commerce, or say when the supply will take place in course of intrastate trade or commerce. So the Parliament has been given the power. So that is Article 269A. Beside this, we are having Article 279A, and Article 279A is dealing with the GST Council. So here the Constitution of GST Council, here President of India is empowered to constitute GST Council. It's the President of India. It is empowered to constitute a GST Council. It's a joint forum of center and state, which will give recommendations. Basically, it will be making the recommendations to the government relating to the various matters. Who is the members of GST Council? Say Union Finance Minister, is chairperson. Then we are having the Union Minister of State. Union Minister of State. In charge of finance. There, he will also be the member. Then in various states, the finance ministers or the ministers which have been notified by the these state, they will also be the members. Among the various state finance ministers, there will be a chairperson of the GST Council. Now basically, what is the role of GST Council? This is very, very important. It can be asked in your examination. What is the role of GST Council? So basically, they will be deciding, they will be playing a recommendatory role. So GST Council, they shall make recommendations to the union and the state that what are the taxes which are to be subsumed, taxes and duties which are to be subsumed in GST. That is what? The taxes cesses and surcharges levied at the central level, levied at the state level and local bodies, which will be subsumed in the goods and services tax. And which goods and services which will be subjected to GST? What will the goods and services which will be what? Subjected to GST. What will the goods and services will be subjected to GST? What will the goods and services will be exempt from GST? Then they will be making the model GST laws, principles of levy, apportionment and of GST on say interstate supplies. What will the threshold limit of turnover below which goods and services will be exempted from levy of say GST? Then the rates including floor rates with bands and services tax, and what will be the space when the special rates of tax will be there to raise additional resources that will be recommended by the this council to the government. Additional resources, say in case of natural calamities are there, disasters are there. So what will be the special rates of tax? Then certain states are recognized as special category states. So special provisions will be there relating to these special category states, that is the northeastern states, that is Arunachal Pradesh, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. And here the hilly states of Himachal Pradesh and Uttarakhand. And Uttarakhand basically, Himachal Pradesh and Uttarakhand, and any other matters relating to GST. So role you have to discuss, role can be definitely asked in the examination, this role of GST Council. Now here the GST Council, they will basically effective date, they will notify the effective date when the GST will be levied on the petroleum products, that is 5 petroleum products. And what is the guiding principles of the GST Council? That there must be harmonized structure for goods and services tax, and development of harmonized national market. Then quorum is 1/2 of the members, 1/2 of total number of members basically shall constitute what? The quorum, 1/2 of the total number of members. And GST Council will determine the own procedure for performance of the functions. Now GST decision which will be taken by GST Council, it will be what? 75% of weighted votes. So weight given to the central government is 33.13%, and state government is in entire together 67%. So fundamentally, if central government casts a vote against any whatever this resolution is there, they give a vote against the same, then it will not be implemented because their vote is 33% and we need 75% of the majority. So the vote of central government shall have a weightage of 1/3 of the total number of votes cast. Whatever is the total number of votes cast, 1/3 will be of the central government, and the votes of all the state government taken together will have what? 2/3 of the total number of votes cast. And in case if there are vacancies, etc., then it will not invalidate the proceedings. Vacancies will not invalidate the proceedings. And GST Council will say settle the dispute between center and one state, on center and state, some states on one side and other states on the other side, or between the states. The disputes will be what? Settled by the GST Council, give a recommendation to the government. So fundamentally this GST Council also important role you must remember. Quorum is 1/2 and 75% of the weighted votes is the this is all about what our first chapter, You are aware of the body of GST law. We are having Central Goods and Services Tax Act for various 28 states and the 3 union territories which are having their independent legislature. We have state GST laws, and for other union territories we are having the UTGST Act and IGST Act for determining the place of supply and when a supply is an interstate supply or an intrastate supply, and compensation to state sectors there. Beside this, we are having rules as well as notifications are issued. Together, they are known as what? Body of GST law. So this was just an introduction aspect of our first chapter. There are certain seamless flow of credit questions you can do from the compiler. In our next chapter, we will be discussing the supply aspect. Now, the next chapter which we will be discussing is supply under GST. Now, this is a very, very important chapter because as you are aware, what is a taxable event in GST? Taxable event is supply of goods or services or both. This is basically taxable event under GST. This is basically what? Taxable event under GST. Taxable event under GST is supply of goods or service or both. Now fundamentally in this particular chapter, we will be discussing section 7, that is dealing with the scope of supply, along with the definitions which are there in section 2, and we will be discussing section 8, that is taxation of mixed supply and composite supply. Taxation of mixed supply and composite supply. So first of all, you know that the supply must be of goods or supply must be of services or supply must be of goods or services or both. So fundamentally, what is covered under the ambit of goods? We are discussing the definitions first. So goods basically means every kind of movable property. Goods means, say, every kind of immovable property. You say movable property, that is what? Immovable property will not be regarded as goods. Immovable property is not regarded as goods. Okay? So goods means every kind of movable property, but excludes what? Money and security is excluded from the ambit of goods. Money and security, the same is, say, excluded from the ambit of goods, that is other than money and security. So goods basically means every kind of movable property, other than money and securities. Other than, say, money and securities, okay, but includes what? But includes what? Actionable claims, growing crops and grass, and things attached or forming the part of land, and which are agreed to be severed before supply or say under contract of supply. Now actionable claims are covered under the ambit of goods, but when we see Schedule 3, see Schedule 3, Schedule 3 is dealing with the negative list where the transaction will not be taxable under GST. So basically actionable claims is covered in Schedule 3. GST will not be leviable on the actionable claims except what? Specified actionable claims. Specified actionable claims. Actionable claims are those claims which can be enforced through court of law, and specified actionable claims are liable to GST. Specified actionable claims are liable to say GST. So fundamentally goods means what? Every kind of movable property other than money and securities, but includes, say, actionable claims. It includes growing crops, grass and things attached to or forming the part of land, which are agreed to be severed before supply or under, say, contract of supply. So the growing trees are there and the contract is to take those trees. So here, if they are severed before supply or under contract of supply, that won't be covered under the ambit of immovable property. That standing trees will not be covered under the ambit of, say, immovable property, and will be covered under the ambit of goods. So supply either must be of goods or supply must be of services, and term services has been defined to mean what? Anything other than goods. The same has been defined in section 2 clause 102, which provides that services means, say, anything other than, say, goods. Anything other than goods. Money and securities. Fundamentally, money and securities also excluded from the ambit of, say, services. So transaction in money. Say transaction in money and transaction in securities is not liable to GST. Transaction in money and transaction in securities, they is not liable to GST. Services basically means anything other than goods. Okay, and it does not include securities and money, but includes any activity relating to, say, use of money or conversion of money by cash or, say, any other mode from one form or currency or denomination, from one form, currency or denomination to another form, currency or denomination, to another form, currency or denomination, for which separate consideration is charged. So this basically, that is what? Service. So if securities, shares are included in the ambit of securities, mutual fund units are, say, covered under the ambit of, say, securities. Fundamentally, if the transaction in money is there, transaction security is there, sale, disposal, etc., that will basically not be liable to GST. But an explanation has been provided that services includes what? Facilitating or arranging transaction in securities. So basically, services includes facilitating or arranging transaction in securities. Facilitating or arranging, basically what? Transaction in securities. Now let us see. This is what? Goods, this is services. So supply must be of, say, goods or services. Then the next definition is money is not covered under the ambit of goods. Money is not covered under the ambit of services. So what basically money means? The term money has been defined in clause 75 of section 2. Basically, we have seen the definition of money in Negotiable Instruments Act also. So money basically means Indian legal tender. Money means what? Indian legal tender, any foreign currency, checks, promissory notes, bills of exchange, letters of credit, draft, pay order, money order, a traveler's check, postal or electronic remittances, or whatever instrument is recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination. So money means what? The Indian legal tender, foreign currency, checks, promissory notes, bills of exchange, LCs, draft, pay order, traveler's check, money order, postal and electronic remittances, and any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but shall not include what? Currency. Currency will not be covered under the ambit of, say, money which is held for numismatic values, that is for coin collection purposes. So if currency is held for coin collection purposes, then same will not be covered in ambit of money. Next is person. Now how the term person has been defined? The term person has been defined in, say, an inclusive manner. The supply must be made by a taxable person. Supply basically must be made by a taxable person. So here, who is a person? For first of all, the person, he must be a person, then only can be a taxable person. And the term person has been defined to include what? Basically, as we see under income tax law also, here the term person has been defined in clause 284. That is, person includes an individual in an inclusive manner. Hindu undivided family is covered. Company, firm, statutory corporations are covered under the ambit of person. Statutory corporation, they are covered under the ambit of person. Government companies covered under the ambit of person. So person includes individual, Hindu undivided family, company, firm, limited liability partnership, association of person or body of individuals, whether incorporated or not, statutory corporations, then body corporates incorporated by under any laws of a country outside India, cooperative societies, local authorities, central and state government is also covered under the ambit of person. So if supply is made by central and state government, then also the taxability will arise. Societies which have been registered under the Societies Registration Act, trust, and every other artificial juridical person which is not falling under the above category. Now the person will be a taxable person only when he is registered. When a person becomes a taxable person, when he is, say, registered under GST law, or he is required to obtain registration, or he is required to obtain, say, registration. Then we come to what? Supplier. So basically, who is a supplier? The supplier basically is a person who is engaged in supply of goods or services or both. That is, person who is engaged in supplying of goods or service or both, and it includes what? Agents also. So supplier in relation to any goods or service or both shall mean the person who is supplying the goods or service or both, and shall include an agent acting on behalf of such supplier in relation to the goods or service or both supplied. However, in case if say now, as you are covered as see, specified actionable claims are liable to GST, and in that online gaming is covered under the ambit of, say, specified actionable claims. So basically, in that case, who will be regarded as a supplier? That is a person who organizes or arranges directly or indirectly supply of, say, specified actionable claims. That is what? Supplier also includes, however, a person who organizes or arranges directly or indirectly supply of specified actionable claims will be covered under the ambit of supplier, including a person who owns, operates or manages digital or electronic platforms for such supply, who owns, arranges or, say, operates or manages basically digital or electronic platform for such supply of, say, specified actionable claims. He will also be deemed to be a supplier of such specified actionable claims, whether such actionable claims are supplied by him or through him, and whether consideration in money or money's worth, including VDA, for supply of the actionable claims is, say, paid or conveyed to him, or it is paid or conveyed through him, or it is placed at his disposal in any other manner. And basically, the provisions of the Act shall apply to such supplier of specified actionable claims. If he is a supplier, liable to pay tax in relation to supply of, say, specified actionable claims. So fundamentally, the person who organizes, who arranges, directly or indirectly, supply of specified actionable claims is covered under the ambit of supplier, or persons are also into those persons who owns, operates or manages digital or electronic platform for supply of specified actionable claims. They will be covered under the ambit of supplier. Then I am making supply of goods, I am making supply of services, but somebody must be a recipient of the same. So who is a recipient? Recipient of supply of goods or services or both. Recipient of supply of goods or services or both means what? Where, say, consideration is payable. Where, say, consideration is payable for supply of goods or service or both. Here, if the consideration is payable, the person who is liable to pay the consideration will be regarded as a recipient. Where consideration is payable, then the person who is liable to pay the consideration is regarded as a supplier. And in case of certain transactions which have been listed in Schedule 1, they are regarded as supply even when made without consideration. So fundamentally, when no consideration is payable for supply of goods, the person to whom the goods are delivered, the person to whom the goods are delivered, or the person to whom the goods have been made available, or possession of the goods have been given, basically, or these goods have been made available, will be regarded as a recipient. That is where no consideration is payable, for supply of, say, goods, or the person to whom the goods are delivered or are made available, or to whom the possession or use of goods is given or made available. And say where no consideration is payable for supply of service, the person to whom the service is rendered. And here reference to the person to whom supply is made shall be construed as reference to what? Recipient of supply, includes the agent also. Now here, the supply of goods or services, the same must be in the, taxable territory. What a taxable territory is? Taxable territory means basically what? Territory to which the provisions of the CGST Act applies. And as you are aware, the provisions of CGST Act applies to whole of India, including the state of Jammu and Kashmir. So India is covered under the ambit of taxable territory, including Jammu and Kashmir. And non-taxable territory means a territory which is outside the taxable territory. Non-taxable territory is what? Outside the taxable territory. Now basically here India has been defined in what India means. Basically India means the territory of India, that is what? States and union territories are covered. Territory of India. Territorial waters, that is territorial waters, as you are aware, extends to 12 nautical miles. Seabed and subsoil underlying such territorial waters. Seabed and subsoil underlying such territorial waters. Then continental shelf and exclusive economic zone or other maritime zone. Now exclusive economic zone extends to, say, 200 nautical miles from the appropriate baseline. 200 nautical miles is what? The exclusive economic zone. And continental shelf, exclusive economic zone is covered under the ambit of India, and then airspace above the territory, that is states and the union territory, and the territorial waters. So India means what? The territory of India, territorial waters, seabed and subsoil underlying such waters, continental shelves and exclusive economic zone, and other maritime zone. Then we will be seeing if supply is made in territorial waters, how you will be determining the place of supply as per the provisions of section 9 of the, the CGST Act. Okay. Then the, supply of goods or services must be made in course or furtherance of business. Now here business basically has been defined in an inclusive manner. Business includes any trade, commerce, manufacture, profession, vocation, say wagering, etc. that is covered under the ambit of business, even if these activities are carried out with no profit-making objective. There is no monetary benefit, and any activity which is incidental or ancillary to the same, any activity which is incidental or ancillary to these activities, or the activity will be regarded as business even if there is no volume or, say, continuity. So any trade, commerce, manufacture, profession will be covered under the ambit of business. Besides this, in case if any person supply any goods or services in connection with closure, at the time of closure of business, or acquires any goods or services, including capital goods, in connection with commencement of the business, that will also be covered under the ambit of business. Now, concept of mutuality is not prevalent in GST law. Concept of mutuality is not prevalent in GST law. So here, if any club, association of person, etc., provides any services to its members for a consideration, if any club, association, etc., provides any services to members for a consideration, that will be covered under the ambit of, say, business. Then admission for a consideration to any premises. Admission for a consideration to any premises, the same will be covered under the ambit of business. Similarly, if a holder of office is there, and that holder of office, basically the same is accepted in course or furtherance of business. So here, say a chartered accountant is there and he is doing professional of accountancy, and now he has been appointed as an independent director in a company, and he holds that office, and same has been accepted in course or, say, furtherance of profession, then that will also be covered under the ambit of business. Similarly, if any race club is there, whatever activities are there of a race club, including by way of totalizator or license to bookmaker or activities of licensed bookmaker in such club, that will be covered under the ambit of, say, business. Then any activity by the government or local authority as public authorities. Any activity by the government, local authority, or, say, as public authorities, the same will be covered under the ambit of, say, the term business. So this is business has been, say, defined. Then the under 7(1)(a), when we will discussing, the supply must be for a consideration. Now, how the term consideration has been defined, that is, consideration is something in return. Something in return, that is consideration. So basically, if Mr. X supplies you goods, you pay something in return. So that is basically a consideration. So it may be a payment in money, or it may be otherwise also, for inducement of supply, or, say, as a result of supply, that you supply these goods, you supply these services, I will make this payment. Basically, the payment you are making, that will be regarded as what? The consideration for inducement of supply of such goods, or, say, services, or as a result of supply of such goods or, say, services, or that is in respect of or in response to, say, for inducement of supply of, say, such goods or service. So in respect of supply, in response to, or for inducement of. Okay? And this may be, the consideration may be paid by the recipient, that is a physical recipient, or any other person also. And similarly, monetary value of an act, or forbearance of an act for the, in respect of the supply, in response to supply, or for inducement of supply, shall be regarded as consideration. Okay? Monetary value of an act or forbearance of an act. That may be by the recipient or by any other person. Now, deposit will not be regarded as a consideration. If you give any security deposit, the same will not be regarded as a consideration. But when the supplier applies such deposit as a consideration, if he applies the deposit as a consideration, then it will be regarded as a consideration. If any subsidies are received by the central government, if subsidies are received from the central government or state government, subsidies will not be regarded as a consideration. Subsidies will not be regarded as a consideration. Then we are seeing that specified actionable claims. So actionable claims other than specified actionable claims are not liable to GST. We can say that specified actionable claims, basically these specified actionable claims, they are liable to GST. So specified actionable claims, they are what? Liable to GST. Specified actionable claims are liable to GST. Now what specified actionable claims means? What? Actionable claims which have been involved in betting, gambling and lottery. That was earlier also covered. Besides this, casinos, horse racing and online money gaming. Casinos, horse racing and online money gaming will also be covered under the ambit of, say, specified actionable claims. Now basically online gaming is liable to GST. So what online money gaming is? Online money gaming means online gaming in which the player pays or deposits money or money worth. Player pays or deposit money or money worth, including virtual digital assets, in expectation of winning money or money's worth, including VDA, in any event, including any game or scheme or competition or any other activity or process. Whether or not the outcome, its outcome or performance may be based on skill, it may be based on chance or both, and whether the same is permissible or otherwise under any other law or not. So even if it is illegal also, then also it will be covered under the ambit of online money gaming. Basically, you know, bingo, Lotto, Team Banao, Dream 11, all these are what? Coming under the ambit of online gaming, and GST will be leviable. And valuation will be done as per the provisions of Rule 31B, 31C. We'll be discussing the same in the valuation chapter. So what online gaming means basically? Online gaming means offering of a game on the internet or electronic network, and includes online money gaming. Offering the game on internet or electronic network and includes, say, online money gaming. So this was these are the various definitions. Now in our next lecture, we'll be discussing about the scope of supply, that is section 7. These were the various definitions. Now we'll be starting with section 7. Section 7 is dealing with the scope of supply. Section 7 is dealing with what? Scope of supply. So here section 7(1)(a) provides for what? Section 7(1)(a) provides for that supply includes, say, all forms of supply of goods or services or both. Okay, the supply must be made for a consideration. It must be made in course or furtherance of business, and it must be made by a taxable person, and the supply must be a taxable supply for bringing the same under purview of GST. The supply must be of goods or services. Supply must be of, say, goods or services. If something is not goods or if something is not services, then taxability will not arise. So transaction in money or transaction in securities, they are neither goods nor services, so hence GST won't be leviable. The supply should be of goods or services. You know, supply must be of, say, goods or services. Then supply must be made for a consideration. Supply must be made for a consideration, and supply must be made in course or furtherance of business. Supply should be made by a taxable person, and supply should be a taxable supply. So supply should be of goods or services. Supply should be made for a consideration. Supply should be made in course or furtherance of business. Supply should be made by a taxable person, and supply should be a taxable supply for 7(1)(a). Now in section 7(1)(b), what they provide is, say, if you are importing any service, import of service is there. Import of service is there. The same is for a consideration. The same is for a consideration, and it may be in course, or may not be in course or furtherance of business. Then 7(1)(c) provides for what we say, that certain activity will be covered under the ambit of supply, even say for section 7(1)(a), there must be a consideration. But 7(1)(c), they say that activities or the transactions which are specified in Schedule 1, they will be covered under the ambit of supply. Same are covered under the ambit of supply, even when made without consideration. It will be covered under the ambit of supply even when made without consideration. So basically that has been 7(1)(c). So here under section 7 subsection 2, you know, they can specify basically the activities which are not regarded as supply. They will be neither supply of goods nor supply of services. They will not be chargeable to GST. So section 7 basically provides for what? Supply includes what? 7(1)(a), that is supply of goods or services or both for a consideration. Supply of, say, goods or services or both for a consideration in course or furtherance of business. Then 71AA is concept of mutuality is not prevalent in GST law. Therefore, the activities or transactions which are undertaken by an association of person, which has been undertaken by an association of person by for its members or members to AOP, or inter-se transactions between the members, that will also be covered under the ambit of supply. Then 71B, as I already told you, if you import any service for a consideration, whether the same is for a personal use or whether the same is for business use, there is a consideration, it will be covered under the ambit of supply. 71C provides for the transactions which will be regarded as supply even when made without consideration. Then what subsection 1 A of section 7 provides for what? That when a transaction is covered under the ambit of supply, when a transaction is covered under the ambit of supply, then it can be either supply of goods or it can be, say, supply of services. It can be either supply of goods or it can be supply of services. Then 7.2 provides for those transactions which will neither be regarded as supply of goods nor, say, supply of services. So basically, section 7.1A provides for what? Supply for a consideration in course or furtherance of business. Supply includes, say, sale, transfer, barter, exchange, license, rental, lease or disposals, etc. Supply includes sale, transfer, barter, exchange, license, rental, lease, disposals, etc. for a consideration, whether or not in course or furtherance of the business. So supply, basically they must be in whether or not, they must be in course or furtherance of business. Supply for the purpose of section 7.1A, the same must be in course or furtherance of business. The same is for a consideration. It includes supply of goods or services, that is sale, transfer, barter, exchange, license, rental, lease or disposal of, say, goods or, say, services. So if for 7.1A, if consideration is not there, then it won't be regarded as supply for 7.1A. If in course or furtherance of business it is not there, then it won't be regarded as, say, supply. Then 7.1AA is providing for what? The activities or transactions involving, say, supply of goods or services by any person. That is, if a joint venture is there or an association of person is there and it is providing, say, goods or services to members, or say vice versa, members is providing goods and services to JV or AOP, then that transaction will be regarded as what? The supply. So here the term supply includes what? The term supply includes what? Activities or transactions by a person. The term supply includes what? Activities or transactions by a person other than an individual, to its members or constituents or vice versa for cash, deferred payment or other valuable consideration. So here it has been clarified that notwithstanding anything contained in any other law for the time being in force, or say any judgment, decree, order or of any court, tribunal or authority, the person and its members, that is JV or say AOP and its members or their constituents, they will be deemed to be what? Separate persons. And in case if the transactions takes place between the JV and the member to JV, the same will be what? Covered under the ambit of GST, provided other characteristics are also satisfied. So here concept of mutuality is not prevalent in GST law. Okay. Then we are 7.1B provides for what? If you are importing the service if you are making importation of service, and the same is for a consideration, the same is for a consideration, okay, then it will be covered under the ambit of supply. It may be in course or furtherance of business, and it may not be in course or furtherance of business, may not be in course or furtherance of business. So normally when we import any service for a consideration, taxability arises, and normally import of service is chargeable to tax under reverse charge mechanism. What reverse charge mechanism is there? Reverse charge mechanism means what? The recipient of the service, the recipient of the supply is required to pay GST on the same. So here in normal circumstances, if a registered business user is importing any service for a consideration, then reverse charge mechanism is there. But if online information database access and retrieval services are provided to whom? Unregistered person. Here the service supplier is located where? In non-taxable territory, or say if online gaming services, they are provided basically to a person located in taxable territory. Here the same is chargeable to tax under forward charge mechanism. Okay. Then next is here section 71C. This is a very, very important section, very, very, very important section, which provides that the certain transactions have been, say, listed in Schedule 1. Certain transactions have been listed in Schedule 1, and these transactions will be regarded as supply. Same will be regarded as supply. Same will be regarded as supply, even when made without consideration. Even when made without consideration. So these 4 transactions have been listed. Number 1 is permanent transfer or disposal of business assets, on which ITC has been taken. Permanent transfer or disposal of business assets on which ITC has been taken. Say if a company takes, has purchased computers and taken ITC on the same. Now they permanently transfer these computers to a school. They have given the same as a donation and no consideration is received. But since the company has what? Taken the input tax credit, and now they are disposing of those assets on which they have taken the ITC, permanent transfer or disposal of business assets on which the input tax credit has been taken, the same will be what? Regarded under the same will be covered under the ambit of, say, deemed supply. It will be regarded as what? Deemed supply even when made without consideration. Then the second activity is, say, supply of, say, goods or services between related persons and, say, between, say, distinct persons. Supply of goods or services between related person and between distinct persons. Now, what is a distinct person? Say if ABC Limited is there, it is registered HO is in, say, UP, registered HO is in UP, and it is having a branch that is also registered in UP. Branch is also registered in UP, or the branch is registered in MP. Then they will be regarded as establishment of distinct person. They will be regarded as what? Establishment of distinct person. So they will be regarded as what? Establishment of distinct person. So in case, if it is establishment of a distinct person, branch transfer is there, even when made without consideration, the same will be regarded as supply when the same is made in course or furtherance of business. So here, supply of goods or services in course or furtherance of business, say between related persons or between say distinct persons, the same will be regarded as supply even when made without consideration. Now, who a related person is, that has been given in explanation to section 15. Who is regarded as related person? The same has been given in explanation to say section 15. Now, explanation to section 15 provides for that say who will be regarded as a related when supplier and the recipient when they will be regarded as related. So, they are the officers or directors of one another business. Number one is they are the officers or directors of one another business. Number two is they are legally recognized partners in business. They are legally recognized partners in business. They are employer and employee. They are employer and employee. Any person controls or holds directly or indirectly 25% or more of say outstanding voting stock or shares of both of them. Say any person, any third person directly or indirectly owns, controls or holds 25% or more of say outstanding voting stock or shares of both of them. One of them directly or indirectly controls the other. Together they directly or indirectly control a third person. Together they are directly or indirectly controlled by a third person, or they are the members of the same family. And family basically means here the spouse and children of the individual, spouse and children of the individual, parents, brothers and sisters of the individual, parents, brothers and sisters of the individual, wholly or mainly dependent on the individual. Then one of them, in case if one of them is a sole distributor, sole concessionary or sole agent of the other person, they will be deemed to be what? They will be deemed to be the related persons, and persons here also include say legal person. But remember that if the employer and employee are related, so if an employer gives a gift to the employee, the gift has been given without consideration to the employee, it is not forming the service contract of employment, that gift will also not be taxable provided the value of the gift does not exceed rupees 50,000 during the financial year. So, gift by the employer to the employee which is not forming the part of service contract of the employment, the same will not be taxable. In case it forms the part of service contract of employment, then it is salary, and on that salary GST will not be leviable. And even if it does not form the part of service contract of employment, if the employer give employee a gift, say he has gifted rupees say worth something rupees 50,000, it won't be taxable. But if it is 1,01,000, then it will be taxable. Entire amount GST would be leviable. So, second one is what? Supply of goods or services between say related persons or distinct persons. So, that will be when made in course or furtherance of business, that will be regarded as supply. Then supply between say principal and agent. So, here where principal the supplies the goods to the agent, where agent undertakes to make a further supply on behalf of principal, where the agent undertakes to make further supply on behalf of principal. Basically, agent must issue invoice in own name. Okay, agent must issue invoice in own name rather than in name of principal, rather than in name of principal. So, here supply that will be deemed supply, that is principal is supplying goods to agent. Then in case if an agent is procuring goods on behalf of principal, this is applicable only in respect of goods and not services. If goods have been this particular principal agent relationship, that is in relation to goods only, if principal say agent basically receives goods on behalf of principal and he receives invoices in his own name, and then he further undertakes to supply those goods to the principal, then it will also be covered under the ambit of say deemed supply, and valuation will be made as per the provisions of Rule 29. Then next is fourth is importation of service without consideration from related person, okay, that is in course or furtherance of business, it will be covered under the ambit of supply. So, import of services for a consideration 7(1)(b) is there. It may be in course or say furtherance of business. It may be in course or say furtherance of business. It may not be in course or furtherance of business, but since it is for a consideration, the same will be covered under the ambit of supply. Then import of services without consideration. Now import of services, say without consideration. Import of services without consideration will not be covered under the ambit of supply. Okay, will not be covered under the ambit of supply. But if it is from related person or the same is from distinct person in course or furtherance of business, if it is from related person or it is from distinct person in course or furtherance of business, the same will be covered under the ambit of supply. Okay. Then what section 7(1)(a) provides? Section 7(1)(a) provides for what? Section 7(1)(a) provides for the activities or transactions which are neither regarded, which I say basically, which may be either regarded as supply of goods or say supply of services. So we have to make a distinction basically for those transactions or activities. First of all, the same falls under the ambit of supply. If same falls under the ambit of supply, it can be either supply of goods or it can be say supply of services. So 7(1)(a) is providing for those transactions which will be regarded either as supply of goods or supply of services. So in case if there is a transfer of title in goods, the title can be transferred here. If title of goods have been transferred, then definitely it will be regarded as supply of goods. Then transfer of title in goods under an agreement that property will pass at a future date. Since title is transferred, it will be supply of goods. But if title is not transferred, if use of goods is given or right to use goods is given, if use of goods is given or right to use the goods is given, then it will be regarded as what? Supply of service. The same will be regarded as say supply of service. So right or undivided share in the goods without transfer of title in them, that will be regarded as say supply of services. Right or undivided share in goods without transfer of title in the goods, the same is regarded as say supply of services. Then in respect of land and building, if you say take any land or building if you give any land or building say on lease, tenancy, easements, license has been given to occupy the land. If land is given on lease, tenancy or other rights of occupancy, it will be regarded as supply of service. Similarly say if building, then in case if any building has been given on lease or let out say on commercial, industrial or residential purposes, if you have been given a building on lease, that will be regarded as basically what? Supply of services. That will be regarded as supply of services. In case if you carry out the job work activity, what job work activity is? Treatment or process which has been performed on another person's goods. Treatment or process that has been performed on another person's goods. Basically that is what? Supply of services. Treatment or process which has been performed on another person's goods is supply of services. Then we are having say if there is transfer of business assets. Now in case if goods now here the goods forming the part of the business assets, in case they are transferred or disposed of by or under the directions of a person. Goods forming the part of business assets, they are transferred or disposed of by or under the directions of any person carrying on business, so as no longer forming the part of the asset of the business. Then it will be regarded as say supply of goods. So if you are transferring the business assets and they will no longer form the part of your business, the same will be regarded as supply of goods, and we have already seen that permanent transfer or disposal of business assets on which you are taking the ITC without consideration will also be regarded as supply. Then goods which are held or used for business. Now, if your goods are held for business, is given for private use. They are not sold, they are not transferred, they are given for private use. Say, MD is been given a car on hire for personal use, it will be regarded as supply of service. So, goods held or used for business, they are put to private use or are made available to any person for use for any purpose other than business by or under the directions of person carrying on the business. The same will be regarded as what? The same will be regarded as supply of service. Then in that next case is what? Goods which are forming the part of the assets of the business. Goods forming the part of the assets of the business are, say, then the person ceases to be a taxable person, and here it will be deemed that he has transferred those goods. It will be regarded as, say, supply of goods. So goods forming part of assets of the business, goods forming part of assets of the business, carried on by a person who ceases to be a taxable person, shall be deemed to be supplied by him. The same will be what? Deemed to be supplied by him in course or furtherance of business. Immediately before he ceases to be a taxable person. Exceptions are what? Business is transferred as a going concern, or business is carried on as a personal representative who is deemed to be what? A taxable person. Business is transferred as a going concern, or say business is deemed to be what? Carried on by a personal representative. In case transfer is of a going if transfer is of a going concern, transfer of going concern will be regarded as what? Supply of service. Transfer of going concern, it is supply of service, but the same has been made exempt from GST, which we'll be discussing in the exemption chapter. It will be discussed by us in the exemption chapter. Then certain declared services are there, such as renting of immovable property. Renting of immovable property is a supply of service. If, say, under construction building is sold, that is, say, if you receive whole or say part of consideration, if you receive whole or part of consideration, that will be regarded as, say, supply of service. So construction of a complex building or a civil structure, construction of a complex building or a civil structure or part thereof, that will be regarded as, say, supply of service. Then development, design, programming, customization, adaptation, upgradation, enhancement or implementation, that will also be of IT software, will be regarded as supply of service. Temporary transfer or permitting the use of intellectual property rights, that is what? Copyrights, trademarks, say licenses, etc. That will be what? Regarded as a supply of service. So here temporary transfer or permitting the use or enjoyment of intellectual property rights, that is regarded as, say, supply of service. Then agreeing to the obligation to refrain from an act or to tolerate an act. So agreeing to the obligation to refrain from an act or to tolerate an act or to do an act, that will also be regarded as, say, supply of service, but provided, first of all, if the same must fall under the ambit of supply, then only it will be regarded as a supply of service. Then right to use of goods has been transferred. If right to use goods has been transferred, that may be for cash, deferred payment or other valuable consideration. That may be cash, deferred payment or, say, other valuable consideration. In that particular circumstance, that will be regarded as, say, supply of service. Okay. Then works contract supply, that is a composite supply, and say restaurant services where food is there plus services there, or catering services there, where food and service both are there, that will also be regarded as, say, supply of service. So that is what provided in schedule 2. So either it will be supply of goods or supply of service. This has been done to avoid any sorts of disputes. Then schedule 3 provides for those transactions or those activities which are neither regarded as supply of goods nor say supply of services. Schedule 3 is listing those transactions which are neither regarded as supply of goods nor supply of services. Number 1 is if an employee provides any services to his employer in course of or in relation to his employment. So if there must be a contract of service and employee-employee relationship must be there. Employee-employee relationship must be there. Whatever salary is received by the employee, which is forming the service contract of employment. So even if it is a rent-free accommodation, other perquisites, GST won't be leviable on the same. So whatever services they are provided basically by whom? An employee to the employer in course of or in relation to his employment. The same will not be regarded as what? The same will not be liable to say GST. Whatever salary is received, it will neither be regarded as supply of goods nor supply of services. Similarly, if any services are provided by say any court, tribunal which has been established under any law for the time being in force. So services by any court, tribunal established under any law for the time being in force. Services by a court, tribunal established under any law for the time being in force. The same will neither be regarded as supply of goods nor say supply of services. It won't be chargeable tax. Whatever fees is charged. So here even district courts are covered, high courts are covered, and these tribunals or consumer courts are also covered. Then we see there are MPs, MLAs. So whatever functions are performed by members of parliament, members of state legislature, members of panchayats, functions performed by members of parliament, members of state legislature, members of panchayats, members of municipality, and members of the other local authorities. The members of parliament, members of state legislature, members of panchayats, members of municipality, and members of other local authorities. The same will be regarded as what? Supply. Will neither be regarded as supply of goods nor supply of services. Fundamentally, it won't be regarded as supply only when these functions are performed in capacity as member. If say a member of parliament is there and they are running beauty parlor also and providing services there, it will be definitely chargeable tax. If they are running a rent-a-cab scheme, that will also be say taxable. Then whatever duties are performed by the person who holds any post in pursuance of the provisions of the Constitution in that capacity, that will neither be regarded as supply of goods nor say supply of services, such as President, PM, Vice President, C&AG, they are holding judges, they are constitutional functionaries. Whatever services are performed by them and they are getting remuneration for it won't be taxable. Then if any person has been elected as a chairperson, member or director in a body corporate which has been established by the central government, state government, local authority, and he is not deemed to be an employee. So these will also not be, say, whatever services have been performed by them will not be taxable. Then funeral, burial or crematorium services or mortuary services, including say transportation of deceased. Funeral, burial, crematorium or say mortuary services, including say transportation of deceased, that won't be liable to GST. Then sale of land and sale of building. If building is sold after issuance of the completion certificate, if building is sold, say after issuance of the completion certificate, it won't be liable to tax. If building is sold, say after issuance of the completion certificate. Fully completed building is sold. Sale of land, This is immovable property and will not be liable to GST. So it is services of funeral, burial or crematorium will not be covered under the ambit of GST. Then sale of land and sale of building after issuance of completion certificate will not be covered if no consideration has been received during construction. Then actionable claims, they are goods, but they are not liable to GST. However, specified actionable claims are what liable to GST. What is specified actionable claims? We already discussed betting, gambling, lottery, horse racing, online gaming, okay, casinos. They are specified actionable claims and they are liable to GST. Then supply of goods from a place in non-taxable territory. Supply of goods from a place in non-taxable territory to another place in non-taxable territory without the goods being entering into India. That is basically out-to-out transactions. This is out-to-out transactions. That will not be liable to GST basically. Then merchant trading transactions, we can say it's a merchant trading transactions. Then supply of warehouse goods to any person before clearance for home consumption. Supply of warehouse goods for any person before clearance for home consumption. And say if the goods have been shipped from Japan and during the course of movement of the goods, if title of the goods have been transferred to any other person, then that one transaction will not be regarded as supply. So supply of goods, that is IC sales. IC sales. That is supply of goods by consignee to any other person by endorsement of document of title to the goods after the goods have been dispatched from the port of origin located outside India but before clearance for home consumption. That won't be regarded as basically the supply. Now remember that exempt supply includes what? The transactions which are not leviable to GST. And in this particular case, non-taxable supplies are covered under the ambit of exempt supplies. But say for the purpose of reversal of input tax credit, if common input and input services are used, or say capital goods are used for exempt and taxable supplies, then you have to reverse proportionate ITC which is attributable to exempt supply. So remember that whatever transactions have been listed in this schedule 3, they won't be regarded as exempt supply for the purpose of reversal of input tax credit, but only this, that is sale of land and sale of building, will be regarded as exempt, and supply of warehouse goods before clearance for home consumption will be regarded as exempt supply for the purpose of reversal of the ITC. And what will be the value? Value will be the stamp duty value in respect of land, and in respect of supply of warehouse goods before clearance for home consumption, the value will be what? The value of the goods if sold to an incoming passenger at the international airport by the duty-free shops. Okay. Now, that is schedule 3. Besides this, if any central government, state government is carrying out any activity which is entrusted to a panchayat or which is entrusted to a municipality, that will also be covered under the not liable to GST. And similarly, state government is giving license of alcoholic liquors for human consumption will not be liable to say GST. Then let us analyze the term scope of supply and then these circulars, and we'll be ending this particular chapter then. So first of all, it's a revision only, that first of all see whether the activity is supply of goods or say supply of services. If it's say it's neither goods nor services, same will not be regarded as supply. If the same does not fall under this goods or services, it won't be regarded as supply. But if it is for, say, it's falling under sale, barter, exchange, license, transfer, lease, disposal, etc. of, say, goods or, say, services, and the same is for a consideration, and it is in course or furtherance of business, the same is not listed in schedule 3, then it will be, activity will be regarded as supply. Otherwise, if it is, this supply Basically, it is sale, disposal, transfer, etc. of goods or say services for a consideration in course or furtherance of business. And in case it is listed in Schedule 3, it won't be covered under the ambit of supply. This is 7(1)(a). Now, is the activity is covered under the ambit of sale, disposal, transfer, etc. of goods? Well, yes. Is it for a consideration? No, it is not for a consideration. Is the activity specified in Schedule 1? Because the activities or transactions which are specified in Schedule 1, they can be supply even when made without consideration. Well, no, it has not been specified there, then it won't be regarded as supply. Well, yes, it has been specified there. Is it in course or furtherance of business? So, no, it is not in course or furtherance of business, then it won't be regarded as supply. But yes, it is in course or furtherance of business. Do it fall under the ambit of import of service? Yes, it is falling under the import of service. And whether it is specified in Schedule 3, well, no, it's not been specified in Schedule 3, then it will be regarded as supply. Now here, if the same, is it for a consideration? Is it in course or furtherance of business? No, it is not in course or furtherance of business. Whether it is import of service? Well, no, it is not import of service, then it won't be regarded as supply. Yes, it is import of service, then it is for a consideration, not in course or furtherance of business, but it is import of service, then as per the provisions of 7(1)(b, it will be regarded as supply, provided it does not fall under the ambit of Schedule 3. Okay, this was this. Now we are having, say, composite supplies and say mixed supplies. Composite supplies and mixed supply. Composite supply and mixed supply. Now, composite supply basically consists of what? Two or more supplies which are naturally bundled. Which are naturally bundled. They are in conjunction with each other, and one of which is a principal supply. One supply is a principal supply. And all other supplies are, say, incidental. Say, goods X are being purchased, and now the recipient of these goods X says that I want the goods to be packed in a, say, beautiful packing. In this case, packing becomes incidental. Principal supply is supply of goods. Tax rate will be applicable, that of the principal supply. What principal supply means? Principal supply basically means what? Supply of goods or service which constitutes predominant element. Which constitutes what? Predominant element of composite supply, to which other supply, to which say other supply forming part of composite supply is, say, ancillary. Principal supply means what? Supply of goods or service which constitutes what? The predominant element of composite supply, and of which the other supply forming part of the composite supply is ancillary. Then we come to what? Mixed supply. Mixed supply is basically two or more individual supplies. They are two or more individual supplies. They are not naturally bundled. They can be supplied independently, but still they are supplied together. Tax liability shall be at the rate applicable to that which attracts the highest rate of tax. Tax liability will be that which attracts a highest rate of tax. Say gift of pack is there, which is comprising of chocolates, candies, balloons, etc. That will be regarded as a mixed supply. And in this case, the liability will be that of the rate, highest rate of tax. So if chocolates are chargeable to tax at 18% GST, and balloons are chargeable to tax at rate of 5% GST, and the entire bundle, tax will be levied at rate of 18%. Then certain circulars have been issued. Say if an artist is there, he removes the artwork for exhibition to the galleries, it won't be regarded as supply because there is no consideration involved till now. But when, some buyer selects the same, then it will be definitely regarded as supply. Now, what happens is, say, government basically gives you a license to extract petroleum. And whatever expenditure is incurred by the joint venture to carry out this extraction activity, expenses, the same can be retained, that petroleum to that extent can be retained by the concerned persons, by the JV. So that is basically regarded as cost petroleum, and cost petroleum is not liable to GST. A circular has been there that is recovery of exploration and production costs, that is cost petroleum. The cost petroleum cannot be regarded as a consideration of service provided to the government of India, and same is not taxable. However, profit petroleum, this government share in royalty, the same has been made exempt. Profit petroleum has been made exempt. Then security lending services. Security lending services, it is not coming under the ambit of sale, disposal, acquisition or transfer of securities. It is basically lending of securities, will be liable to GST. It will be liable to GST. Lending fees is liable to GST. And same is taxable under RCM. Same is taxable under reverse charge mechanism. So supply of securities under security lending scheme by the lender is taxable under GST, as lending of securities is not covered under the disposal of security. It's liable to GST. Same is taxable under RCM. Then we have already discussed about para 3A. So where the invoice for this is supply between, say, scope of supply between, say, principal and agent. When principal gives goods to agent and agent undertakes to further supply, if invoice is issued in own name, it will be covered under para 3A. Own name means name of agent. But if invoice is issued in the name of principal, then para 3A won't be applicable. Similarly is the case of purchases. If purchases are made by agent while invoicing in the own name, and then he further subsequently supplies the same to the principal, then only para 3A will be there. Then tenancy rights, if tenancy rights are there, pagdi is there, the same will be liable to GST. It's a form of leasing. It's a form of lease or rendering of the property, thus it's squarely covered under the scope of supply and taxable. Then whatever remuneration is paid to independent directors or non-employee directors for, say, sitting fees, etc., the same will be covered under the ambit of supply. It will be liable to GST under reverse charge mechanism. Then if director is providing any service not in capacity of director but in his own capacity separately, then in that particular circumstance it will be covered under forward charge mechanism. So if director is running a business of tour operator and he has also provided services to the company but it's not in capacity of a director, then in case forward charge mechanism will be there. The same will not be under RCM. Similarly, if directors are the employees of the company, remuneration is received by them, under section 192 tax has been deducted at source, that is salary, it won't be liable to GST. But if remuneration is received for not forming the form of service contract of employment under 194J, tax is deducted at source, then it will be liable for TDS under 194J, then it will be liable for GST and it will be taxable under reverse charge mechanism. Then in case there is an interstate movement of the various modes of conveyances, interstate movement of various modes of conveyances carrying goods or passengers, the same will not be regarded as supply. However, for repairs and maintenance, it will be regarded as supply. So if you are moving, truck from one state to another, it won't be regarded as supply. But say if any repairs or other activities have been carried out on that truck, then it will be, say, regarded as supply. Then interstate transfer of aircraft engines. It is not aircraft, it is aircraft engine. Parts and accessories for self-use by airlines, it will be liable to GST and ITC will be admissible. Then in case if content is owned by the publisher or content is owned by the author and he has given that content to the printer, paper and printing is of the printer, then basically it will be what? Printing is a job work activity, it will be regarded as supply of service. But in case if any printed envelopes, catalogs or say cartons, etc., they are sold, then here the fundamental thing is the intention is to take these envelopes, etc., then cartons, etc., it will be regarded as what? Supply of goods. Then in case we already discussed that joint venture is providing services to member, member is providing services to JV, or it's inter-se supplies between members also, it will be liable to GST. Concept of mutuality is not prevalent in GST law. Priority sector lending certificates, they are in the nature of goods and they are liable to say GST. The same is taxable under RCM. Then merely the activity of holding of shares of a subsidiary company by holding company per se cannot be regarded as supply of service. Even if a tariff entry has been created for the same, or say service accounting code has been created for the same, just if a holding company is holding shares of subsidiary, it won't be regarded as what? Supply of service. If food and beverages are provided in cinema hall, restaurant services, they are separately charged. Restaurant service will be different and cinema service will be different. But in case if entire amount is charged together, so here if we go in a cinema hall, our intention is what? To enjoy, say, that cinema service. So that will be regarded as cinema service and taxability will arise. So this was all about our supply chapter, which we have discussed. Now we'll be starting with what? Charge of GST. Now the charging section is section 9. Section 9 of the CGST Act 2017. It is a charging section. And charging section for intrastate supplies. So here, if any intrastate supply is there, then the charging section is section 9. Basically, 9.1 is dealing with the charge of GST, charge of CGST, how the tax is levied. 9.2 is providing for the commodities which are not covered under GST till now, that is on petroleum products. GST will be levied from such date as the central government notify on recommendation of the council. No GST till now. Then 9.3, it is dealing with the provisions relating to reverse charge mechanism, RCM mechanism, in respect of notified goods and services where a reverse charge mechanism will be there. That has been covered in section 9.3. And section 9.4, basically when an unregistered dealer makes supply of notified goods or services, notified goods or say services to notified registered persons, reverse charge mechanism is there. So what basically reverse charge mechanism is, where the recipient is liable to pay GST. He is regarded as person who will be required to pay GST. 9.5, it is dealing with the provisions relating to the e-commerce operator is liable to pay GST. E-commerce operator is liable to pay GST. So that is section 9 of the CGST Act, and the charging section under interstate for interstate supplies of goods. For interstate supplies of goods, the charging section is 5. Charging section is section 5. So let us now start with this. First of all, as you are aware, we are having CGST Act 2017. Now this CGST Act 2017, it extends to whole of India, and when the tax will be levied, CGST, when it's a intrastate supply. When there is an intrastate supply, then either CGST or SGST is levied, and in case if it is intrastate supply within the union territories, then CGST and UTGST Act is levied. Now here basically we are having CGST Act, one CGST Act. SGST Acts are there for different states. Different states are having different State Goods and Services Tax Act. Say Delhi is having Delhi State Goods and Services Tax Act. Basically those union territories with independent legislature, these union territories with their legislature of their own, they'll be having state GST law. They are having the state GST law. So they are Delhi, remember it, Jammu and Kashmir and Puducherry. They are having state GST law. That is Delhi, Jammu and Kashmir and Puducherry. And union territories without state legislature. Union territories without state legislature, then they are having one UTGST Act, that is for Andaman and Nicobar Island, Lakshadweep, Dadar and Nagar Haveli, Daman and Diu. Andaman and Nicobar Island, Lakshadweep, Dadar and Nagar Haveli, Daman and Diu, Ladakh and Chandigarh and other territories. Other territories, because in case the same is not covered in the states and they are not left out of the purview of GST, they are coming within India, but they are not coming under the ambit of state, and neither they are covered under the union territories, then they will be covered under the ambit of other territory. Now, in case if there is an interstate supply, then interstate supply transactions are there, IGST Act will be there, IGST will be levied, Integrated Goods and Services Tax Act has been made for the same. Integrated Goods and Services Tax Act has been made for the same. IGST will be levied in respect of the interstate supply. So first of all, we discuss about the charging section. What section 9(1) provides? CGST Act 9(1) provides. So here, basically, the charge is on intra-state supplies of goods or service or both. The charge basically is on intra-state supplies of goods or services or both, except say alcoholic liquor for human consumption. The charge is on say intra-state supply of goods or services or both, except say alcoholic liquor for human consumption. Okay, and here the tax is collected and paid by taxable person. Tax is say collected and paid by taxable person. Charge is on intrastate supply of goods or services or both, except say alcoholic liquor for human consumption. Now GST is an ad valorem tax. GST is basically an ad valorem tax and it is levied on value. How you will be determining the value? The value is the transaction value. How you will be determining the value? The value is the transaction value. Value is the transaction value, and that transaction value is determined as per the provisions of section 15 of the CGST Act. The transaction value is determined as per the provisions of section 15 of the CGST Act, and rates at which CGST will be levied is notified by the government on recommendation of the council. Now here the say if CGST rate is 2.5%, equal amount will be of the SGST, that will be 2.5%, and IGST is sum total of CGST and SGST, that is 5%. If CGST rate is 6%, SGST rate is 6%, then IGST rate will be what? 12%. If CGST rate is 9%, SGST rate will be 9%, and IGST rate will be 18%. If CGST rate is 14%, SGST rate will be 14%, and IGST rate will be what? 28%. So basically, the rates at which GST is to be levied, the same is say notified by the government on recommendation of the council, and in section it has been stated that the maximum rate of CGST can be 20%. So basically, what section 9(1) provides is that there shall be levied a tax. Levy basically is imposition. So there shall be levied a tax called central tax, that is which is levied under Central Goods and Services Tax Act on all intrastate supplies of goods or services or both, except say alcoholic liquor for human consumption. Alcoholic liquor for human consumption is outside the purview of GST. Alcoholic liquor for human consumption is outside the purview of GST. So it will be levied. GST will be levied at rate, whatever is the notified rate on the transaction value as specified in section 15, and the same will be payable by a taxable person. Who is a taxable person? The person who is registered or is required to obtain registration is a taxable person. Then what section 9(2) provides is, section 9(2) provides that, in respect of notified goods, which has been notified, the GST will be levied from such date as the central government so notifies on recommendation of the council. So these are the goods which have been specified under Article 279A5. They are petroleum crude, high-speed diesel, motor spirit commonly known as petrol, natural gas and aviation turbine fuel. So in respect of petroleum crude, HSD, motor spirit commonly known as petrol, natural gas and aviation turbine fuel, they are at present subject to central excise duty and they are subject to say VAT. They are at present subject to central excise duty and VAT or say if central sales tax. Then section 9.3 provides that, section 9.3 is very, very important. Section 9.3 is very, very important, which provides for reverse charge mechanism. What is basically reverse charge mechanism? Reverse charge mechanism is a mechanism where the recipient of the goods, or services is required to pay GST. So here basically the government can notify goods or services where GST will be paid by the recipient. That is 9.3. And 9.4 is what? Section 9.4 provides for what? Section 9.4 also provides for what? The reverse charge mechanism. So, in respect of a specified category of goods or services, when an unregistered person, when an unregistered dealer is supplying a specified category of goods or say services, in real estate sector it is, specified category of goods or services to registered person, that is specified class of registered person, reverse charge mechanism is there, that is under section 9.4. Okay. Now section 9.5 provides for what? Section 9.5 is very, very important. Section 9.5 it is dealing with what's very, very important. Remember, it is very, very, very important. What section 9.5 provides is that in respect of notified services which are supplied through e-commerce platform, e-commerce operator, ECO, is liable to pay GST. Who is liable to pay GST? ECO is regarded as a supplier of service and will be required to pay GST. So here 9.5 provides for what? That the government may notify specific categories of services. The tax on supplies of which shall be paid by e-commerce operator as if such services are supplied through it. The government may notify specific categories of services, the tax on supplies of which shall be paid by e-commerce operator if such services are supplied through it. Now, in case the e-commerce operator is located in the taxable territory, then the person liable to pay tax will be the e-commerce operator. If the e-commerce operator is located in the taxable territory, who will be liable to pay the tax? It's the e-commerce operator. But in case if the e-commerce operator does not have a physical presence in the taxable territory, then who is liable to pay the tax? The person liable to pay tax is a person who is representing the e-commerce operator. The person liable to pay tax is the person who is, say, representing the e-commerce operator. And in case the e-commerce operator does not have a physical presence in the taxable territory, neither is having any representative in taxable territory, then but natural he has to appoint, that is the e-commerce operator has to appoint any person who will be liable to pay the tax. So that is basically provided in section 9.5. Now what services have been notified? Basically, these services have been notified. Number one is, say, Ola, Uber. These are, aggregators who are providing services of, say, transportation of passengers. So number one is services by way of transportation of passengers. By radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except say omnibus. So it services by way of transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except say omnibus, Now in this particular circumstance, who is liable to pay GST on the same? Who is liable to pay GST? It is the e-commerce operator. In respect of omnibus, now you must be made very much clear that in case, if omnibus is owned by the company and company is taking the use of other person's platform for supplying passenger transportation services. So for omnibus, if it is company and company is taking the use of the e-commerce operator platform for providing passenger transportation services in omnibus, company is liable to pay the tax. But in case if the omnibus is owned by other person and they are taking, the platform services to provide services of say transportation of passengers, in case the omnibus is owned by the other persons and they are taking the, omnibus services for transportation of passengers, in that particular circumstance, e-commerce operator is required to pay GST on the same. E-commerce operator is required to pay GST on the same. Then next is in relation to these services. Here, first of all, in case there is accommodation in hotel, if the aggregate turnover of the hotel exceeds 20 lakh rupees or 10 lakh rupees in case of Manipur, Mizoram, Nagaland, Tripura, they are required to get themselves registered and they are required to pay the tax. Similarly, in case of housekeeping services also, in case their aggregate turnover exceeds the threshold limit of registration, that is 20 lakhs or 10 lakhs as the case may be, they are required to pay the tax and they are required to obtain the registration and pay the tax. Then ECO will not be liable. Otherwise, if it is what services say by way of providing accommodation in hotels, in guest house, clubs, campsite or other commercial places meant for residential or lodging purposes, that is hotels, in guest house, clubs, campsites or other commercial places meant for residential or lodging purposes, except where the person supplying such service through e-commerce operator is liable for registration under 22(1) of the CGST Act. So basically here say we are having say Make My Trip, OU, etc. They are the they are basically the e-commerce operators. They are liable to pay the tax. But if the aggregate turnover of the hotel exceeds the threshold limit of registration, they will be required to pay the tax. Similarly, services by way of housekeeping such as plumbing, carpenting, etc., except where the person supplying such service through electronic commerce operator is liable for registration under section 22(1) of the CGST Act. Now here, services by way of say housekeeping such as plumbing, carpenting, etc. will be here the e-commerce operator will be liable to pay tax such as urban clap, etc. But if the person who is supplying the service through e-commerce operators turnover crosses the threshold limit of 20 lakhs or 10 lakhs as the case may be, then in that particular circumstance they are required to get themselves registered. Similarly, restaurant services are there. We are having food aggregators such as Zomato, Swiggy, etc. They will be required to pay tax on the supply of restaurant services other than services supplied by restaurants, eating joints located in specified premises. Other than services supplied by restaurants, eating joints located in specified premises. Now basically what specified premises means? Specified premises means providing hotel accommodation service having a declared tariff of a unit of accommodation above 7,500 per unit per day or equivalent. Above 7,500 per unit per day or equivalent. So these are the specified premises. Okay. Now we come to what this was about section 9.5. Now the main is section 9.3. This is very, very important. Very, 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 very important. This is dealing with what the notified services liable under RCM, liable under reverse charge mechanism. Before discussing this, we will discuss this also, that in case if it is an interstate supply of goods or services, then in that particular circumstance, the integrated tax will be levied, and the rate of IGST we have already discussed. Rest all provisions are same. Beside this, in respect of import of goods, IGST shall be levied and collected in such manner as duties of customs are levied. At the same time, and the duties of customs are levied, except in case of what? Except for online gaming. Except in case of online gaming, where the IGST will be levied as per the charging section, rather than what? As per in the same manner as a custom duty. Now let us start with what? Section 9(3). First is goods transport agency services. When the same GTA is providing services of transportation of goods by road. Basically, services in respect of transportation of goods by road. It can be a case of 5%, it can be rate of tax is 12%. If rate of tax is 12%, then it is covered under forward charge. In 5% also there can be forward charge mechanism if GTA exercises the option. Otherwise, the same will be covered under RCM when the services are supplied to specified categories of the recipient. So here, number 1 is services in respect of transportation of goods by road. Services in respect of transportation of goods by road supplied by a goods transport agency to specified recipients. Who are specified recipients? They are the factory registered under the Factories Act 1948, society registered under the Societies Registration Act 1860, cooperative society it is, persons registered under GST law, body corporates, partnership firms including association of person, and the casual taxable person. These are the specified persons who are located where? In the taxable territory. They are required to pay GST under reverse charge mechanism. However, this reverse charge mechanism will not be applicable in case of GTA services, in case where GTA has exercised the option to pay tax under, say, forward charge mechanism. Where the GTA has exercised the option to pay tax under, say, forward charge mechanism. Similarly, if any services are provided to, say, government departments, local authorities, governmental agencies who are registered only for the purpose of TDS and they are not by themselves making any taxable supplies of goods or services, in that case, whatever services are provided by GTA to them, services provided by GTA to these persons, they are basically exempt. And when the same is exempt, there is no question of, say, RCM. In that case, there will be no question of, say, reverse charge mechanism. Next is about the legal services. Now, in case if any legal services are supplied by an individual advocate, including senior advocate or a firm of advocate, in case legal services are supplied by an individual advocate or, say, senior advocate or firm of advocates, and the legal services are supplied to a business entity which has been located in taxable territory. These legal services are supplied to a business entity located in taxable territory. In this particular circumstance, when the legal services are provided to an individual advocate, including, say, senior advocate, basically legal services are provided by an individual advocate or senior advocate or firm of advocates to a business entity located in taxable territory, reverse charge mechanism will be there. And when, if it is exempt, there is no question of GST. Because if the aggregate turnover of the business entity does in the preceding financial year does not exceed the threshold limit of registration, that is 40 lakhs, 20 lakhs or 10 lakhs, then whatever legal services are provided, the same are exempt. But if it is taxable in case the aggregate turnover exceeds the threshold limit of registration, then it is a business entity located in taxable territory will be required to pay GST. Then in case of arbitral tribunal services, if arbitral tribunal services, they are supplied by arbitral tribunal to a business entity located in taxable territory, reverse charge mechanism will be there. Arbitral tribunal services are supplied to business entity located in taxable territory, reverse charge mechanism will be there. That is the, this business entity located in taxable territory will be required to pay GST on the same. Similarly, next is what? Sponsorship services. Now here, services by way of sponsorship services, which have been provided by any person and the same has been received by a body corporate or a partnership firm. Remember, it has been received by, say, a body corporate or a partnership firm located in taxable territory. Now, say an event has been organized. This event has been organized by, say, Institute of Chartered Accountants of India, and Institute of Chartered Accountants of India avails the, sponsorship services, basically, and HUL is receiving those sponsorship. HUL is providing sponsorship fees to ICI. So basically, HUL is receiving the sponsorship services. They pay, say, 1 crore rupees for sponsoring the event which has been organized by the Institute of Chartered Accountants of India. Here, reverse charge mechanism will be applicable. So if it's received by a body corporate or if it is received by a partnership firm located in taxable territory. But if, say, Mr. Mahadev has given the sponsorship fees to ICI, then in that particular circumstance, reverse charge mechanism will not be there. The same will be taxed under, say, forward charge mechanism. Then whatever services are provided by central government, state government, union territory or local authority. Whatever services are provided by central government, state government, union territory or local authority, to whom? To a business entity located in taxable territory. To whom? It's a business entity located in taxable territory. The same is covered under, say, reverse charge mechanism. That is, a business entity located in taxable territory will be required to pay GST. However, if Department of Post, if services are provided by Department of Post or Ministry of Railways, Indian Railways, or services in relation to aircraft or vessel inside or outside the presence of port or airport, or it is, say, transportation of passengers. So it's Department of Post and Ministry of Railways, Indian Railways, services in relation to aircraft or vessel inside or outside the presence of port or airport, transportation of goods or passengers. In this particular circumstance, the same is covered under, forward charge mechanism. Similarly, if there is a renting of immovable property, until and unless the same is provided to a registered person. If it is provided to an unregistered person, the same will also be covered under, say, forward charge mechanism. But if services of renting of immovable property is there which has been provided by central government, state government, union territory or local authority, if it has been provided by central government, state government, union territory or local authority to a person registered under GST law, it will be covered under RCM. It won't be covered under forward charge. The same will be covered under, say, reverse charge mechanism. Then services by way of renting of residential dwelling to a registered person. So services by way of, say, renting of residential dwelling to a registered person. So any person who is supplying services by way of, say, renting of residential dwelling to a any registered person, the same will be covered under, say, reverse charge mechanism. Here, the recipient of the service, that is the person who is a registered person who is receiving this renting services, will be required to pay GST. But in case if the same has been provided to a registered person, that is an individual for his personal use, or he is a sole proprietor and the same has been used for personal purpose and not for the purpose of business, then in that particular circumstance, renting of residential dwelling will be what? Exempt. Renting of residential dwelling will be, say, exempt. Next is in relation to what? Services of transfer, we are transferring the development rights or floor space index. So services of TDRs or FSIs, including additional FSIs for construction of the project. So here the person, I am, say, landowner. If I transfer these development rights or floor space index, including additional FSIs for construction of the project, the person who is transferring the landowner is transferring the rights to a promoter or builder. In this particular circumstance, the promoter or a builder is required to pay GST under reverse charge mechanism. Here, GST will be payable only on that portion of the flats which remain unsold. Basically on after issuance of CC, still the flats remain unsold. Then GST is payable, otherwise the same has been made exempt. Similarly, if there is a long-term lease of land. Similarly, if there is a long-term lease of land that is 30 years or more, long-term lease of land 30 years or more against consideration in form of upfront amount or in form of say periodic rent for construction of project, then also the promoter or the builder basically is liable to pay GST under say reverse charge mechanism. Promoter or a builder is liable to pay GST under a reverse charge mechanism. Then in case if services are supplied by a director of a company or a body corporate to a company or a body corporate which is located where in the taxable territory, it is a company or the body corporate so located in the taxable territory. It is a company or the body corporate so located in the taxable territory will be liable to pay GST under RCM. But the fundamental thing is services must be provided in capacity of director. Services must be provided in capacity of a director. In case services are not provided in capacity of a director, in that particular circumstance, reverse charge mechanism will not be there. The same will be covered under forward charge mechanism. Then insurance agent services. If insurance agent is providing services to insurance company, insurance agent is engaged in marketing of policies, etc. And in that particular circumstance, it is the insurance company. It is the insurance company will be liable to pay GST under say reverse charge mechanism. The insurance company that will be required to pay GST under say reverse charge mechanism. Then it is what? Recovery agents. There are banking company or financial institutions, NBFCs, which are located in taxable territory. They are appointing recovery agents. So in case of the banking company, financial institution, NBFCs located in taxable territory, they are say, appointing these recovery agents. Reverse charge mechanism will be there. Banking company, financial institutions, NBFCs located in taxable territory will be required to pay GST under reverse charge mechanism. Then we are having say services by way of transferring or permitting the use or enjoyment of copyright. This copyright is in relation to original dramatic work, musical work, or say artistic work. The person who is supplying the service is a music composer, photographer, artist, or the like. Is a music composer, photographer, artist, or the like, and the same has been supplied to a music company or a producer or the like located in taxable territory. Reverse charge mechanism is there. Reverse charge mechanism is there. This is the music company, say Sony Music Limited. A.R. Rahman has say composed a tune and the same has been transferred to Sony Limited. It is the Sony Limited who is paying the copyright fees to A.R. Rahman. Sony Limited will be liable to pay GST on the same under reverse charge mechanism. Then it's transferring or permitting the use of enjoyment of copyrights relating to original literary work. Now here in relation to copyrights, author is transferring the copyrights relating to original literary work to a publisher located in taxable territory. So transfer or permitting the use or enjoyment of copyright covered under section 13(1)(a) of Copyright Act 1957 relating to original literary work. It's the author, he is transferring the copyrights to a publisher who is located in the taxable territory. Basically, in this particular circumstance, the publisher located in taxable territory is required to pay GST under reverse charge mechanism. However, in case they do not pay GST, then author will be required to pay GST under forward charge mechanism. Under forward charge mechanism, if he has taken registration, and filed a declaration to the effect that they will be paying the tax under forward charge mechanism, which cannot be withdrawn within a period of say 1 year, and they have to issue a tax invoice, in which tax invoice they have to make a declaration that this author is, that is we are the authors and we are paying the tax under say forward charge mechanism. Publisher is not required to pay GST under RCM in that particular case. Then in case if any services are provided by members of overseeing committee of RBI to the RBI, if the services are provided by members of overseeing committee of the RBI to RBI, then also in that particular circumstance, reverse charge mechanism will be there. RBI will be required to pay GST under reverse charge mechanism. Then whatever services they are provided by individual direct selling agent. Now DSAs are there. If direct selling agents are there which are engaged in marketing activities, etc., and the services are provided, if they are individual DSA and services are provided to say this banking company, NBFCs, etc., located where in the taxable territory, individual DSA is there, then it will be covered under reverse charge mechanism. Other than individual DSA, other than individual DSA, it will be covered under, say, forward charge mechanism. So services by individual direct selling agent other than what the body corporates, partnerships or LLPs. Basically, these services are provided to banking company or say NBFCs located where in the taxable territory. Here the same is covered under, say, reverse charge mechanism, and banking company NBFCs located in taxable territory will be required to pay GST. Similarly, if any business facilitator is there, not the in rural areas are exempt, but if business facilitator is providing services to banking company located in taxable territory, if business facilitator is providing services to banking company located in taxable territory, it is what the banking company located in taxable territory, they are required to pay GST on the same. Banking company located in the taxable territory will be what required to pay GST on the same. Then in case of the agents of correspondent bank, in case they are the agents of correspondent bank, if the agents of correspondent bank are there and they are providing services to business correspondents located in taxable territory, they are providing services to whom? The business correspondents located in taxable territory. In this particular circumstance, the reverse charge mechanism will be there. Business correspondent located in taxable territory will be required to pay GST on the same. Then security services, this is also important, is asked in examination. Remember, security services supply security services, including what? Security services provided by way of supply of security personnel, including security services provided by way of, say, supply of security personnel. Now, who is a service supplier? Service supplier is a person other than a body corporate. Now, service supplier must be a person other than a body corporate, and the same has been provided to a registered person located in taxable territory. Same is provided to a registered person located in taxable territory. Basically, the registered person located in taxable territory will be required to pay GST. If security agency is a body corporate, then GST will be paid under forward charge mechanism. In that case, GST will be paid under, say, forward charge mechanism. Then we come to what? Security lending services. So services of lending of securities, services of, say, lending of securities under security lending scheme 1997. Services of, say, lending of securities under security lending scheme 1997. Who is a service supplier? He is a lender. Service has been supplied to whom? The borrower. Lender is providing security lending scheme to the borrower. Borrower will be required to pay GST under reverse charge mechanism. Relating to renting of motor vehicles. Relating to what? Renting of motor vehicles. Let us see the same. If services are provided of renting of motor vehicles where cost of fuel is included in the consideration. Now here, remember, if GST is payable at rate of 12%, if GST is payable at rate of 12%, same will be covered under forward charge mechanism. If GST is payable at rate of 12%, same is covered under forward charge mechanism. Here full ITC is available. Full ITC is available to the service supplier. Then in case if the rate of GST is 5%, in case the rate of GST is 5% and the service supplier is a body corporate, the same will also be covered under forward charge mechanism. Like in case of security services, here also if service supplier is a body corporate, will be covered under forward charge mechanism. That is, the supplier will be liable to pay GST. Now where the GST rate is 5% and service supplier is person other than a body corporate. Service supplier is a person other than a body corporate and services provided to a recipient. Services provided to a recipient who is basically a body corporate. Services provided to a recipient who is also a body corporate, who is a body corporate, then the same will be covered under what? Forward charge mechanism. This will also be covered under what? Forward charge mechanism. Then we come to what? Only one case. Rate of GST 5%, service supplier is a person other than body corporate, and services provided to a body corporate. Services provided, recipient is basically a body corporate. Recipient is what? A body corporate. In that case, the same will be covered under reverse charge mechanism. Here, the recipient will be required to pay GST. So GST is payable at rate of 5%. Supplier is a person other than body corporate. It is supplied to body corporate. RCM will be applicable. Body corporate located in taxable territory will be required to pay GST on the same. So here, renting of any motor vehicles, designed to carry passengers, renting of any motor vehicles designed to carry passenger, where cost of fuel is included in the consideration charged from the service recipient. Service is supplied by a person other than a body corporate who supplies the service and does not issue an invoice charging GST at rate of 12%. Who is the body corporate? The body corporate, recipient is the body corporate located in taxable territory, will be required to pay GST on the same. Then, in case of import of service, service is supplied by a person located in non-taxable territory. Service is supplied by a person located in non-taxable territory. Service is supplied by a person who is located where in the non-taxable territory to any person located in taxable territory other than non-taxable online recipient. To any person located in taxable territory other than non-taxable online recipient. Here RCM is there. In case of import of service, reverse charge mechanism is there. Then not in case of import sea freight. Earlier it was there, but now it is not there. Then under 9.3 also, goods have been notified. Certain goods have been notified, which will be covered under, say, reverse charge mechanism. Mainly it is the agricultural produces such as cashew nuts, BD wrappers, tobacco leaves, these are the agricultural produce. So, agriculturalist on raw cotton. So, cashew nuts, BD wrapper leaves, that is tendu leaves, tobacco leaves, raw cotton. Agriculturalist is supplying the same to registered person. Any registered person, reverse charge mechanism will be there. The recipient will be required to pay GST on the same. Besides, in respect of the same, essential oils and silk yarn, basically unregistered person is there. He is supplying the same to registered person. The person who manufactures silk yarn from, say, raw silk or, say, silk worms, worm cocoons, etc. and the same is provided to a registered person. So, RCM will be there, registered person will be required to pay GST under reverse charge. Supply of lottery tickets is there, that is state government, union territory, local authority, and the same, he is supplying services, these lottery tickets to lottery distributor or selling agent. It is a lottery distributor or selling agent will be required to pay GST. Lottery distributor or selling agent is required to pay GST under, say, reverse charge mechanism. If unused vehicles and confiscated goods, they are, or old goods and used goods are sold by central government, excluding, say, Ministry of Railways, Indian Railways. So they are sold by central government, state government, they are sold by central government, state government, union territory or local authority, to whom any registered person who is required to pay GST on the same, it is a recipient will be required to pay GST on the same. Then in case there is a priority sector lending certificate, so here if any registered person is there, he is supplying services to any other registered person, then also in case of priority sector, say priority sector lending certificates of banks, these PSLCs we have seen, they are goods and they are transferable. For a premium, GST will be levied, and it's a reverse charge mechanism. The registered person who is purchasing the same will be required to pay GST under RCM. GTA we have already discussed that if rate of GST is what 12%, same will be covered under forward charge. Person liable to pay GST will be GTA. If it's 5%, in case GTA exercise the option to pay tax under forward charge, then forward charge mechanism will be there. Otherwise, if rate of GST is 5%, RCM is there, and the person liable to pay GST will be the recipient. Who is regarded as the recipient? Person who pays the freight or is liable to pay the freight is liable to pay GST under reverse charge mechanism relating to whatever services are supplied by a director of a company or a body corporate to company or body corporate in his private or personal capacity, the same are not taxable under RCM. Only the services which are provided in capacity of a director, the same will be taxable under, say, reverse charge mechanism. So this was all about what the charging section which we have discussed. This is very, very important, which we have discussed here. Okay. Now we'll be starting with the composition levy. And basically for the small scale traders, manufacturers or service supplier, a composition scheme has been introduced, which is basically an optional scheme. And the provisions relating to composition levy, they are contained in section 10 of the CGST Act 2017. Now here section 10(1) and 10(2), basically it is dealing with the composition levy, or say we can say composition scheme for supplier of goods, and 10(2)(a), it is dealing with the composition scheme for service suppliers. It is dealing with composition scheme for service suppliers. Now, here this scheme is a optional scheme. If you want to opt for the provisions of this scheme, then you can enter this scheme. Here, tax is paid at composite rate. Same cannot be charged from customer. And here it cannot be charged from customer. And the composition supplier is not eligible for any ITC. Composition supplier is not eligible for input tax credit. So fundamentally now we will be starting with this composition scheme. Basically this is an optional scheme. It is an option for a specified category of small taxpayers to pay GST at a very low rate on the basis of their turnover in the state or say union territory. Now here the under section 10(1) and 10(2), it is a composition scheme for the supplier of goods, and 10(2)(a), basically it is a composition scheme for service suppliers. Now what are the advantages of the composition scheme? Here the rate of tax is very low. You are required to pay just 1% GST consisting of 0.5% CGST and 0.5% SGST, and beside this in case of service suppliers it is 6% of the turnover, and restaurant service supplier it is 5% of the turnover. And here hassle-free simple procedures are there for taxpayers. They are required to pay the tax on quarterly basis, and they are required to file the return, that is GSTR 4 return, on yearly basis up to 30th April of the next financial year. And here the tax calculation is very simple. Based on the turnover, and here tax calculation is very simple, and it's based on what? Turnover, and a very simple annual return is required to be furnished. Now here who are basically eligible to opt for composition scheme? That is, we have the aggregate turnover limit. Remember, we have aggregate turnover limit for supplier of goods. If their aggregate turnover in the preceding financial year in the preceding financial year does not exceed rupees 1.5 crores. Does not exceed rupees 1.5 crores. If it does not exceed rupees 1.5 crores, they are eligible to opt for the composition scheme. So a registered person, basically whose aggregate turnover in the preceding financial year does not exceed rupees 1.5 crores, whose aggregate turnover in the preceding financial year does not exceed rupees 1.5 crores, he is eligible to opt for composition scheme. Then, in respect of the northeastern states, except Assam and Uttarakhand. Uttarakhand is covered here. The threshold limit will be rupees what? 75 lakhs. So for Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Tripura. So Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Tripura, Sikkim and Uttarakhand. The threshold limit will be rupees 75 lakhs. The threshold limit will be rupees 75 lakhs. Whereas for Assam, these are special category states, Himachal Pradesh and Jammu and Kashmir. Assam, Himachal Pradesh and Jammu and Kashmir, the threshold limit will be rupees 1.5 crores. That is for remaining states as well as Assam, Himachal Pradesh, Jammu and Kashmir. The threshold limit will be rupees 1.5 crores. So basically it is the aggregate turnover. The aggregate turnover. You must remember the definition of aggregate turnover, because aggregate turnover they can ask you whether XYZ Limited will be eligible to opt for composition scheme or not. That depends upon the aggregate turnover. And aggregate turnover basically means what? The aggregate value of all taxable supplies. All taxable supplies, excluding inward supplies on which tax is to be paid under reverse charge mechanism. So it is taxable supplies are included in aggregate turnover. Exempt supplies are included. Zero rated supplies are, exempt supplies are included. In exempt supply, say nil rated supplies are also covered, as well as non-taxable supply is also covered. Then we are having exports, that is covered. That is exports. Exports is covered. Besides this, interstate supplies are also covered. Interstate supplies are covered in the ambit of the aggregate turnover. But what is not included in the aggregate turnover is the central tax, state tax, union territory tax, integrated tax and cess. Besides this, what is not included in the aggregate turnover? Supplies. This is inward supplies on which tax is paid under RCM. Now here, for this particularly this particular computation of 1.5 crores or 75 lakhs, what here the aggregate turnover basically includes what? Aggregate turnover include what? The value of supplies made by such person from 1st April of the financial year. from 1st April of the financial year, but up to the date when he becomes, say, liable for registration. That will be included. 1st April of the financial year up to the date when he becomes, say, liable for registration. That is included in the aggregate turnover. But what is excluded? That is to be remembered, but shall not include what? The aggregate turnover will not include what? The value of exempt supply of services. It will not include exempt supply of services provided by way of extending deposits, loans or advances. Provided by way of extending deposits, loans or advances, insofar as the consideration is represented by way of, say, interest or discount. So in computing the aggregate turnover, what is to be excluded? It will not include what? The value of the exempt supply of services. It will not include what? The value of the exempt supply of services provided by way of extending deposits, loans or advances, insofar as the consideration is represented by way of, say, interest or discount. Insofar as the consideration is, say, represented by way of interest or discount. Now here, this basically we have to see that what is the rate of the composition tax for the manufacturers. For the manufacturers, it is 1% of the turnover. It is 1% of the turnover. It is 1% of the turnover in the state or union territory. For restaurant service suppliers, it is 5% of the turnover. It is 5% of the turnover. 2.5% is the CGST element. 2.5% is the SGST element. 2.5% is the CGST element and 2.5% is the SGST element. And for traders, it is 1% of turnover of taxable supplies. 1% of turnover of taxable supplies. So in case of traders, only taxable supplies are included for the purpose of GST rates. Only taxable supplies are included. Now here, that is 1% of the taxable supplies only. It won't be covering exempt supplies. Whereas in case of manufacturers, exempt supplies are also included. Now what they say is, here, in case of service suppliers, first of all, their aggregate turnover, for service suppliers, their aggregate turnover must not exceed rupees 50 lakhs. For service suppliers, their aggregate turnover must not exceed rupees 50 lakhs in the preceding financial year. Now, if you are a service supplier here, then in that particular circumstance, rate of composition tax will be 3% CGST element and 3% say SGST element. 3% is the CGST element and 3% is the SGST element. Now, in case here, if you are supplier of goods, they can also supply services. And the value of supply of services must be how much? It should not exceed what? It should not exceed 10% of turnover. 10% of turnover in state or union territory. Or rupees 5 lakhs, whichever is more. This 10% of turnover is of the preceding FY. So if my turnover in the preceding financial year was 120 lakhs and I am supplier of goods, I can supply miscellaneous amount of services up to rupees say 12 lakhs. If my turnover in the preceding financial year was say rupees 40 lakhs, I can supply miscellaneous amount of services up to rupees say 4 lakhs, 5 lakhs, which are say higher. So that has been provided. And in this case also it has been provided that the value of exempt supply of services, the value of exempt supply of services provided by way of extending deposits, loans or advances, insofar as that is represented by way of say interest or discount, shall not be taken into account in determining the value of the turnover in the state or union territory. The same will not be taken into account for determining what the value of the turnover in the state or union territory. Here for rate of tax, turnover in the state or union territory, basically turnover in the state or union territory, the same will not include here, because up to the date of registration you won't be paying the tax. So it won't include what? Supplies from 1st April of the financial year. Supplies from what? 1st April of the financial year up to the date when the person becomes liable for registration. We will not be required to pay any tax on up to the threshold limit of say 20 lakhs or threshold limit of 40 lakhs or threshold limit of 10 lakhs as the case may be. So you won't be paying any tax on that supplies. Besides this, what will not be included? Exempt supplies of services. Exempt supply of services provided by way of extending deposits, loans or advances, insofar as the same is represented by way of say interest or discount. So interest and discount element will not be included. For the, that is for the survey that this is what traders, only taxable supplies are already, only taxable supplies will be what? Included. Now, who are the persons who are not eligible to opt for composition scheme? So in case he is a casual taxable person or a non-resident taxable person, he is a casual taxable person or a non-resident taxable person, he won't be eligible to opt for what? Composition scheme. Similarly, if we are procuring any goods or services on which tax is payable under reverse charge, so we will be required to pay the tax under reverse charge at full rate. GST will be paid. So I am a composition supplier. Say I am availing legal consultancy service. I am a composition supplier. I am availing legal consultancy services which is chargeable to tax under RCM. In that particular circumstance, I will be required to pay full rate of tax on the legal consultancy services received. Besides this, if I am availing the services of GTA, I will be required to pay for tax at the full rate. Besides this, I must not be engaged. I must not be engaged in manufacture of the notified goods. I must not be engaged in manufacture of the notified goods. What are notified goods here? These are the notified goods. Ice cream and other edible ice, whether or not containing cocoa. Pan masala, aerated waters. Tobacco and manufactured tobacco substitutes. So ice cream and other edible ice, whether or not containing cocoa. Pan masala, aerated waters, tobacco and manufactured tobacco substitutes. Fly ash bricks or fly ash aggregates with 90% or more of fly ash content, or say fly ash blocks. Bricks of fossil meals or other siliceous earth, building bricks and earthen or roofing tiles. I must not be the manufacturer of these items. If I am manufacturer of these items, I won't be eligible to opt for composition scheme. Besides this, it has been further provided that here, if I am opting for the composition scheme, I will not collect tax on my supplies, and I will be required to issue bill of supply instead of tax invoice. Composition supplier cannot issue what? Tax invoice. He will be required to issue what? Bill of supply, and the amount of composition tax cannot be charged from the customers. Amount of composition tax cannot be charged from the customers. Besides this, he will be required to mention that word composition taxable person at prominent place of his business. Now let us see the persons who are not eligible to opt for composition scheme either under 10.1 or 10.2. So in case a person is engaged in making any supply of goods or services which are not leviable to tax, if the person is engaged in making any supply of goods or services which are not leviable to tax, such as alcoholic liquor for human consumption, or say petroleum crude, high speed diesel, motor spillet petrol, aviation turbine fuel, natural gas. Then persons engaged in making any interstate outward supply of goods or services. If a person is engaged in making what? Interstate outward supply of goods or services, will not be eligible to opt for compulsion scheme. Then in case if you are supplying goods or services, if a person is supplying goods or services through electronic commerce operator, if a person is supplying any goods or services through an electronic commerce operator who is required to collect tax at source under section 52, who is basically required to collect tax at source under section 52. Besides this, if he is a manufacturer of say ice cream, pan masala, tobacco and aerated waters, fly ash bricks, fly ash aggregates, or say fly ash content, fly ash blocks, bricks of fossil mills or other similar silaceous earths, building bricks, earthen or roofing tiles, then they will not be eligible. Besides this, if a casual taxable person is there or a non-resident taxable person is there, if a casual taxable person is there or a non-resident taxable person is there, he won't be eligible to opt for compulsion scheme. Supplier of services will not be eligible under 10(1) or 10(2), but they will be eligible under 10(2)(a). But a registered person who is opting for compulsion scheme under section 10(1), he is allowed to make supply of services other than the restaurant service, because restaurant services have been made separate. They can supply services, as I have already told you, of a value not exceeding 10% of the turnover in the preceding financial year, or rupees 5 lakhs, whichever is say higher. And in case computing the turnover limit here in the state or union territory, here also interest on loans, deposits or advances, the same will not be say taken into account. Now the other aspects are what? The compulsion supplier is required to issue bill of supply. He cannot issue tax invoice. The compulsion tax cannot be collected from the recipient. Composition tax cannot be collected from the recipient. Input tax credit cannot be availed by the compulsion supplier. He is not entitled to avail ITC. And as soon as the aggregate turnover crosses the threshold limit of rupees 1.5 crores or 75 lakhs or 50 lakhs as the case may be, then here exemption, they won't be eligible to pay tax. So as soon as your aggregate turnover crosses the threshold limit of 1.5 crores or 75 lakhs or 50 lakhs, person shall not be eligible to pay tax under compulsion scheme. His option will cease. And compulsion scheme, if availed, will include all registered persons having same PAN. It will apply to all place of business. So XYZ Limited is having say 3 places of business, one in Jaipur, Rajasthan, one in Lucknow, UP, and one in Bhopal, MP. So the same will be eligible for all the 3 places of business. They cannot pick and choose. Basically, it won't be eligible. So if you want to pay compulsion for Jaipur, not for Lucknow and Bhopal, that won't be possible. And in case, if you have wrongly availed the composition scheme, in that case, you will be liable for penalty. So in a composition, supplier you must remember, can make interstate purchase, but he cannot effect interstate sales. He can make interstate purchases, but he cannot effect what? He will not be able to effect interstate sales. So interstate supplies cannot be effected by the composition supplier. And as I already told you, say if they ask you to determine the composition tax liability where exempt supply is 25 lakhs, 5 lakh is on account of say interest and discounts, interest received, and 28 lakhs is taxable supplies. Overall is how much? Overall turnover is 58 lakhs. So if you are a trader, you will be required to pay 1% GST on 28 lakhs only. But if you are a manufacturer, you will be required to pay 1% composition tax on how much? 58 minus 5 lakhs. That is what? 53 lakhs. That is the difference between a trader and a manufacturer. For trader, only taxable supplies are included. For manufacturer, taxable supplies as well as exempt supplies are included. But exempt supply by way of interest or discounts, the same is not included for determining the tax liability also. So this was all about what? The composition scheme which we have discussed. Threshold limit you must remember. So this is all about the composition scheme.